everyone to High Performance Success. My name is Jason Burke. We have a great day two planned today. We have some great speakers on tap. We have Mike Walsh, one of the top real estate investors for over 30 years. He's a creative real estate expert. He specializes in tax liens and deeds. He's going to be talking about how the top real estate strategies and how they do them with little or no money. Then we have Lisa Rodriguez from NuView, and she's going to talk on how to buy more real estate using your IRA to acquire more real estate assets. And then we're going to have raising capital expert Brad Blazar. Brad has raised over $2 billion of capital. Brad has shared a stage with Shark Tank's Kevin Harrington. So he's going to teach you about the secrets to talk to high net worth individuals to raise money to fund your business, real estate projects. Or that's myself, Jason Burke, CEO of High Performance. That's some event expert. He's going to be talking about how to become a big star in event plan. Especially what we're going to talk about today is how to be put on your live events and what you need to do to really have your live events go well.
Jason, welcome everybody. First of all, I always like to start off with how I started and got into real estate in the first place, because a lot of people, sometimes when you watch people who are they become successful at the thing that you want to do, sometimes it's intimidating when you haven't done any deals yet and you're trying to get started and you think, well, of course that guy can do it, because people think that you came out of the womb knowing how to do this stuff. And so I always like to go into my background, because I had never a desire to be a real estate investor. I remember in the middle of grade 12, I had no idea what I wanted to do the following year. And my parents were always, especially my mother, she's always like saying, Mike, you need to become a doctor or lawyer, doctor, lawyer. That's all I ever heard. And anybody who knows me knows I'm terrified of blood. So doctor was off a table right from the get-go. And so by default, I decided I was going to go get my degree in law. And to make a long story short, by the time I got my first degree, I had racked up all these student loans and decided before I go back and get my next degree, I want to get these loans paid off. And a good friend of mine, his mother was a manager at the phone company, and it paid well. It was union. It was government run at the time. And while I was there, I bought my very, very first home to live in. I managed to get my credit score pretty good. I had to be creative, by the way, because I didn't have any money. I didn't have the down payment. So I had to be creative. And that's why I love to teach people how you can get started. If you don't have a lot of resources, how you can get started with very little, because I had to. But I bought my very first home. And shortly after I bought it, my mortgage broker called me up and said, hey, Mike, you know what? Your credit's good. You're making good money. If you want, I can get you another mortgage to buy another property. And I remember thinking to myself, why do I want another property? And then he explained to me, well, you buy this property, you put some tenants in there, they pay down your mortgage, and 25 years from now, you've got a free and clear home, and that's your retirement plan. I thought that kind of makes sense. So in those days, I had no idea of any due diligence. I had no idea, what to look for in a real estate deal. So the only due diligence I knew is I wanted to buy a home that a property that was close to where I lived, so I didn't have to drive very far to collect my rent money. And I wanted to find a home that was pretty. And by the way, those are not the criteria I'd recommend that you use when you buy a revenue property. We'll talk about that later. But anyway, I bought the second property, and a few years after I bought it, I was still working at the phone company, and the prices of homes in my market shot up tremendously. There's a big boom. I remember thinking to myself, over the last 2 years, I made this much at the phone company and I made this much in real estate, and I don't even know what I'm doing in real estate. So if I did this on purpose instead of by mistake, what would that look like? And so that was the first time in my life where I really knew what I wanted to do. Before that, I was kind of living my mother's dream for me to go down that path to become a lawyer. That was the first time where I actually had a passion for something. Now, the only problem is, now I'm 55. Back then I was in my mid 20s, early 20s actually. And I didn't really have a strategy, but being in my mid 20s, my ego got the best of me. I thought I knew everything there was to know about real estate. So I promptly quit my job at the phone company, not realizing that now I'm not going to qualify for any mortgages. So don't do that. Don't go quit your job, until you get established. And then I had also, my mother was driving me crazy. She said, make sure you get your next degree first, so you have something to fall back on. And if you want to do real estate after you got that degree, fine, but at least you'll have something to fall back on. I remember telling my mother, listen, I don't need that degree. I don't want to be a lawyer. That's not my passion. And I basically told her I'm not going back to school. And she's still kind of pissed at me to this day, but that's all right. So anyway, quit the job, told my mom I'm not going to law school anymore, and didn't really have, like I said, I didn't really have a strategy. My first success was only because I had really good timing, really good luck. It had nothing to do with my skill set. And so once again, my ego was getting the best of me. And I went and found another property. And you got to remember, the first property that I bought, it was meant to be a 25-year hold. It was meant to be my retirement plan. And I sold that. And now I had no job. And I was trying to figure out, well, how do I get a paycheck like every month or two? Because I don't have any more money coming in. Now, luckily I had that lump sum. But anyway, the next property that I bought was a failure. I didn't really know what I was supposed to look for in order to do a flip. When you're trying to do a short-term deal, you have to look for much different things than if you're buying and holding. And I lost a lot of the money that I made on my first deal on that second deal. And it was a very humbling experience for me because I didn't want to go and tell my mother she was right. Being in my mid-20s, I could not go tell my mother that, yes, I need to go and have something to fall back on. So I couldn't tell her she was right. So I had no choice but to figure this out. And I basically took what I had left and I hired a mentor to teach me what he was doing. He was a very successful flipper in the market that I was in. And if it weren't for me kind of knocked back down to earth and getting somebody to help me, I might be on this show talking about real estate law right now, but I certainly wouldn't be here as an investor. So the reason I tell you this story is real estate was not in my blood. I was not a natural at it. It's something that I learned, and it's something that everybody can learn. So if you're right now feeling discouraged, or maybe you're like a lot of people right now, and COVID is obviously causing a lot of transformations for a lot of people. Maybe you lost your job and real estate is something you've always kind of thought about. This is a great time to do it. And I guarantee you that if I can learn how to do this, you can learn how to do this too. So that's how I got my start. If you fast forward, I've now been doing it for 31 years. And there's definitely been some ups and downs. Luckily, more ups than downs because I learned how to do things strategically and properly. And I've been through a lot of different phases. So, the first deal, like I said, it relied 100% on luck. There was absolutely no skill to it. The one thing I will say is when you buy and hold properties, it's very forgiving. So if you can wait long enough, even if you overpay for the property, the market will catch up. So as long as you can sustain it, you're going to be fine. But when you get into the game of doing things such as flips and wholesale deals, and if you don't know what some of this stuff means, I'm going to explain it, so don't worry, or tax deeds, it's not forgiving. You need to know exactly what you're doing. The time to get the map is before you go into the woods. And so I'm going to give you, as much as I can in the time that I've got here today and talk about some of the things you can do right now. Now, obviously, we're in very unusual times compared to where real estate normally is. Obviously, if you're watching this live, we're in the middle of the COVID pandemic. And depending on where you live, some people are still locked down. There's some stay-at-home orders. The good news is with technology, we can actually do real estate from the comfort of our own home, and we can actually do it, believe it or not, with very little or no money. And I'm going to give you some examples of that because I know a lot of people are skeptical. And if it wasn't true, I would not be where I am, because my very first couple of deals I literally, when I have people that come to me now and they say, Mike, I'd love to get into real estate, but I've got no money. I go, man, you are so lucky, because when I did my first deal, I was $25,000 in debt and I was trying to get to no money. So the good news is there's stuff you can do even if you don't have a ton of cash. If you have time and the ambition, I'm going to show you some different things you can be doing to move forward in this industry. So, and by the way, I like to interact. So feel free to I've got the chat box open. I've got the Q&A box open. So I'm happy to answer any questions as I go. This is about you. It's not about me. So I want to make this as meaningful as possible for you. So anyway, as we all know, these are very unusual times. Right now, a lot of the markets are going crazy. There's a shortage of properties, and a lot of markets are booming right now, even though they shouldn't be. And so I wouldn't recommend feeding into the frenzy. Don't feed into the markets that don't make sense, where I've seen properties selling for hundreds of thousands of dollars more than what they should be selling for. So number one, don't just buy properties because you can or because everybody else is doing it. Be strategic. Now the good news is what's coming down the pipeline looks a lot different than what's going on today. Right now, there's a moratorium on foreclosures that's going till at least June. And so the banks are not able to foreclose on people at the moment. And I'm glad. I mean, I'd hate to see people being kicked out in the streets in the middle of a pandemic and homeless. That would be horrible. But the truth of the matter is at some point that's going to stop. The moratorium is going to be lifted. The government is not going to keep sending people stimulus checks forever. And a lot more people are likely to get in trouble. And so what we're going to see, actually, I want to talk about what happened in 2007, 2008. I don't think it's going to exactly mimic it, but there's going to be a lot of similarities. So back in the last big recession, I was investing originally a lot in the Las Vegas market. And for those of you who don't know, Las Vegas was actually the hardest hit market in all the US. From its peak to its lowest point, it went down 80%. So imagine a home that was at one point worth $200,000, all of a sudden being worth $40,000 or $50,000. So that's how badly that market was hit. Now, a lot of people who were investing back in those days, they lost a lot of their properties, and the reason for that is they weren't investing smart. A lot of people jump into markets before every disaster, before a market drops. We usually see a big boom. And then it hits a certain point where it's just not affordable anymore and people can't afford to get into those markets. And then we see prices usually come down and start plummeting pretty quickly. And I think we're going to see some similarities. We're going to see the biggest difference this time is once the pandemic hopefully comes to an end and things get, I'm going to use the word normal in quotations. I don't think normal, like what life looked like in 2019, I don't think we're going to see that again. We're going to have a new normal. And I'm not saying it's bad. I think some things are going to be better. Some things are unfortunately going to be worse, but we're going to have a new version of normal in, later in 2021 or 2022, hopefully sooner than later. But back then, the markets were hit pretty much all across the country, and as a matter of fact, globally. What we're going to see this time is likely a lot of people leaving expensive places, going to cheaper places. And we're also going to see people leaving places where there's no work and going to places where there's jobs being created. So some good examples of that are happening right now. We see a lot of people, I'm not sure how many of you guys are in California. I know so many people leaving California, they're going to Texas and Idaho and Phoenix and Vegas. They're going to other places where the cost of living is a lot lower, the tax system's a lot more favorable, and they're just leaving. On the East Coast, we're seeing a lot of New Yorkers. Maybe in Manhattan, they're going to Brooklyn or they're going to Florida. A lot of people in the East are heading to places like Atlanta, which is one of my favorite markets because there's lots of jobs being created there. So that's going to be the trend. And I don't believe every market's going to fall. I think some markets are going to benefit. If you follow where the population is going, where the jobs are being created, that's where the money is going to be. And I would particularly recommend if you can get into buying rental properties in those markets and holding them, rent is going to go up tremendously and probably the prices will too over time. If you're on the opposite end, investing in markets that are where people are leaving, you're probably going to be having some challenging times and your net worth is probably going to go down and you're probably going to see a lot of the same problems that we saw in 2007, 2008, where a lot of investors lost their entire portfolios because they weren't in the right place at the right time. They weren't doing the right strategies for what the market was doing, and they're going to be in a really bad spot. So having said all that, what this means is that if you can pick the right markets and be in the path of progress, there's going to be a lot of money to be made. And I know some of you, at least some of you are once again, you're sitting there saying, well, I don't have a whole lot of cash. I really want to participate. And what we're going to see, by the way, is probably the biggest transfer of wealth in history. And so if you take the time to learn some of these strategies, then you're going to be very well positioned to take advantage of what's coming down the pipeline. Now, going back to 2007 one more time, during those days, I actually was seeing a whole bunch of people obviously losing their properties. And it was a very, very horrible time for very many people. And so I actually started up a company that I called Foreclosure Fixers. Now, Foreclosure Fixers, I'm sure a lot of you have seen those postcards that you get in the mail that say, we buy homes, we pay cash for your home, we buy ugly homes, etc. Well, a lot of these people that are in what's called pre-foreclosure, they know when they see these postcards, this is just somebody trying to steal their home from them. And a lot of those postcards, you have to send a lot of postcards to get a response. Now, I sent out, I first of all took the time to learn the foreclosure laws inside out. And I sent out flyers that said, I can help stop the foreclosure. And so I came at it from a very, very different angle. And what I found is I had two different types of people that were contacting me. Number one, sometimes bad things happen to good people. And right now I can't think of a time in history with COVID where more good people are unfortunately losing their businesses, they're losing their jobs. And people that would have never dreamed of missing a mortgage payment, they've never been late on a credit card payment in their life, all of a sudden they're being put in a situation where they just don't have the resources to make those payments. So if you can get a hold of these people in pre-foreclosure and come up with a solution, get them to actually reply to your marketing, there's a lot of money in that. So anyway, there's two different types of people that would contact me. One is, as I mentioned, sometimes bad things happen to good people. Now imagine somebody lost their job and they got $20,000 in arrears on their mortgage. And now they've got another job and they can afford the monthly payments again. They just can't afford those arrears. Well, people like that, I would actually go and I loan them money. I pay off their arrears. I actually stop the foreclosure, help them stay in their home, and they would pay me back that money in installments. Now, I'd always, of course, put the proper paperwork and the proper things in place to make sure if I didn't get paid, I would end up with a property. And I was very transparent. I'd say to the homeowner, nobody in their right mind is going to loan you money when you're in arrears, except for me. But I want to make sure that you pay me back. And so I was, very transparent and said, if you don't make your payments, I am going to take your home, and you're going to be in the same position as if you don't pay the bank. And I'm happy to say that 100% of people I loan money to paid me back without any problem. So that's the good news. Now, the second type of person that would call on my marketing, these are people that typically live beyond their means. And I remember when I used to do my own property management, and never do your own property management, by the way, but when I used to do that back in the early days of my career, I'd always joke that my tenants would have a nicer car than me. They'd have a way better stereo, way better TV, yet I owned the home and they were my tenants. So there's a lot of people that live way beyond their means. They have a home much bigger than what they can afford. Even if there was no COVID, they're in a ticking time bomb. They have something that if they miss one paycheck, I actually read a stat recently that said 90 some odd % of people, if they got a $500 car repair bill, couldn't pay that bill because they don't have that much money saved up, which is crazy. But anyway, these people were in a ticking time bomb. And what I would do is I would give them what I call soft landing, meaning that I could have gone in there and negotiated anything I wanted because they were usually in a very desperate situation. But instead of going in for the home run, I would actually try to create a win for them. So I'd always make sure that they had money for a damage deposit, several months rent, money for food, and then I'd help them get into another property that was more affordable for them, either maybe one of mine. If I had another property in that market, I would do a rent to own for them, something more affordable, help them get back in the game. Or I'd team up with a property manager and let the property manager find them a place to rent. And then I'd keep in touch with these people and help them rebuild. And this was one of the most successful strategies that I've ever done of many. I've done a lot of strategies over 31 years. And the reason for that is when I help these people and I gave them what I call that soft landing, if you keep working with them, number one, if they got laid off, they probably worked with 10 other people that got laid off at the same company, and they're going to send all their friends to you. So instead of one paycheck, I was getting numerous paychecks. Quite often, when I was billing them out, I would have to call the lenders, and quite often these were private lenders, and try to renegotiate with them to make some of the arrears go away to make the deal something that I can make a win for me as well. And a lot of the lenders started to see what I was doing, and they said, hey, well, I've got 20 other people that are in a position where they're in arrears on their property. Can you do something for them? And so instead of taking the home run, I had a whole lot of paychecks that were maybe mid-range paychecks, but I had a lot of them. And so it was a very, very successful strategy. And also it was very gratifying because I got to help a lot of people that were in trouble. And I also got to help them rebuild because I was giving them advice on how to rebuild their credit. And guess who they'd come to when they wanted to buy their next home? It was me. And so you could do the exact same thing. Now, I know some of you, once again, are thinking, well, I don't have any money. So I'm going to teach you, I'll teach you a strategy right now called wholesaling. And I'm not sure if anybody has talked about this strategy yet, but I'll just give you a really quick, brief rundown. So imagine you found somebody who was in a position to, they had to get rid of their home really, really quickly. And they were willing to sell a home worth $150,000. They were willing to let it go for $100,000 just to save their credit rating or to move on, or just get this big headache that they had in their life gone. And imagine you didn't have that $100,000 to buy the property. Well, you could call somebody like myself and say, hey, Mike, I found this really smoking deal on a property. There's $50,000 equity in it. If you're willing to give me $10,000, I'll assign that deal to you. And so what that means is you're going to get paid whether I'm successful or not. I'm going to pay you $10,000. You keep that money. I go and do the deal. You've now transferred that contract to me. And to do that deal, in some places, you don't need a single dime to put that property under contract. In some places, to make it legal, you have to put $1. So if you have $1 in your pocket, you can literally do a wholesale deal. Now, the good news is, well, the bad news and good news is there's going to be a lot of people in trouble. And it's good news for us because I don't really like the term real estate investor. I like the term problem solver. And as a problem solver, we go and fix other people's issues. And as a result, we get paid for it. We always create a win-win. So I never teach people to go and find somebody who's down on their luck and go kick them while they're down and add salt on the wound just to make a paycheck. I don't recommend you go find some little old lady who doesn't know the value of her home to go make a paycheck. But the great news is there's lots of opportunity for win-wins. And during the days of my foreclosure fixers, I wrapped it up probably around 2009, 2010. But for the beginning of the recession, we helped a lot of people stay in their home. We helped a lot of people, maybe we couldn't keep them in their home, but we get them into something else instead of them being on the streets. And I made a lot of money doing it too. So it was a win for me as well. And the thing that we're going to see a lot of is a lot of these people in pre-foreclosure once that mortgage moratorium stops. Now, so that's just one of many, many ways you can do deals with very little or no cash. There's a whole bunch. There's things called subject to, where you take over somebody's existing mortgage. And it doesn't matter if you have good credit, bad credit. A lot of these properties need zero down to do it. There's lots of different things you can do. I want to talk though about one of my favorite strategies. I know some of you are thinking, well, where do I find these people in trouble? Where do I even locate them? And so as Jason mentioned, one of the things I specialize in is something called tax deeds. And what a tax deed is, when somebody hasn't paid their property taxes, usually in 2 or 3 or 4 years, eventually the county is going to put that home on the auction block. Now, the county needs this money for their schools, the hospitals, to keep their police force going. They can't call their chief of police and say, hey, you know, when Mike Wolf pays his property taxes, we can pay you your paycheck. They can't do that. So they need this money. And eventually they're going to put these homes on the auction block. Now, my favorite place to do this particular strategy is in Houston, Texas. And every month, right now, that auction is closed, by the way. But every month when there's no COVID, that auction is open, and they publish a list of properties that are going to go up on the auction block at the end of the month. Actually, it's on the first Tuesday of the month is when that auction takes place. And usually there's anywhere from 500 to several thousand properties that are going to change hands at that auction on any given month. Now, a lot of people will look at that list and they'll pick the properties they're interested in bidding on. By the way, don't ever do that unless you know how to do the due diligence steps. I have actually a webinar that talks a little bit about some of the due diligence steps. So I'll give you my email address later if you want to reach out. I'll send you the webinar for free. But don't ever go to this auction without knowing what you're doing, or you will lose your money. But once you know what you're doing, you can go to this auction and sometimes get some really good deals. I've had one of my students picked up a single family home for $7,200. Now, that wasn't the down payment. That was the actual purchase price. And the home was worth somewhere between $90,000 and $100,000. Now, obviously, you're not going to get a deal like this every single day. I want to set realistic expectations, but you can get these type of deals if you are consistent and attend these auctions. Now, but an even cooler strategy is what I call the trifecta of real estate. So now we have this list, and I mentioned earlier, we're problem solvers. Now, if we go buy a home at the auction, we're solving a problem because the county needs that money. They can't keep their police going and their schools and their hospitals if they don't have this money. So we are solving a problem, but I'd rather back up a step and see if I can help that homeowner. And that list of properties, that's a list of people that are in trouble. So I would take that list. I would send out one of my foreclosure fixers flyers to each of those people on the list and then wait to see who responds. And then I would try to come up with solutions for them. And by the way, there's a lot more solutions than what I taught you the basics. I told you can wholesale, you can buy it and flip it. You can become the bank and loan out some money to that homeowner and help them stay in the home. You could also do a joint venture and say, hey, listen, you're about to lose your home. Why don't we fix it up? I'll put up the money, we'll fix it up. We'll put it on the MLS. We'll sell it before it goes to auction. And I want to make a profit because I've invested some cash in your property. But let's split the deal. Let's both. You'll walk away with some cash. I'll walk away with some cash. And it's way better than letting the bank or the county have your home. So there's a whole bunch of different solutions. But anyway, I would always try to get to the homeowner before they lost that property. I would try. Whenever that list is just a list of people that have this major problem hanging over their head that they're about to lose their home. And so if you can go create a win for them and a win for you before it even goes to auction, it gives you a big advantage because now you don't have to compete with all the people that are at the auction. So anyway, that's the first part of the trifecta, is trying to get to those homeowners when they're in what's called pre-foreclosure. Obviously, we can't help. There's thousands of thousands. Across the US, there's actually hundreds of thousands of homes that go to auction every single month. And we can't help everybody, obviously. But that's the first part of the trifecta, is try to help people as early on as possible. The second part of the trifecta is going to the auction, picking up the property. And by the way, sometimes you can actually buy the property at the auction and work out something with a previous homeowner. If they're, sometimes they're still there, usually they're not, but sometimes they're still there. And maybe you can create a rent to own for them, help them get back into ownership. There's different ways that we can still try to create a win for that previous homeowner. So that's the second line of attack. And then there's a third thing you can do. And this one, even very advanced real estate investors, very few people have ever even heard of it. And it's something called overages. And what an overage is when we go to these auctions, if the opening bid on a property is $5,000 and it sells for $50,000, that first $5,000, that belongs to the county fair and square. That's a back taxes. The additional $45,000, that actually belongs to the previous homeowner. And most homeowners have no idea this money is owed to them. And the county makes very little attempt to get this money to them because there's what's called a statute of limitations. Once the statute of limitations runs out, the people can't go back and get the money. And to me, it's very, very sad that if you go to 7-Eleven and steal a candy bar, the police are going to come and take you downtown and fingerprint you. If the government steals literally billions of dollars of people's money, nobody sees a problem in that. So a really cool strategy, and one that's very fulfilling in my opinion, is to go track down these homeowners and say, listen, I know, imagine if somebody just lost their home over $5,000, the opening bid was $5,000. That means that they were $5,000 away from saving their home from going to auction. And for somebody who just lost their home over $5,000, if you go to them and say, listen, I know somebody who owes you $45,000, and if you're willing to split it with me, and you get to negotiate, you can say, I'll take 10%, 20. My friend who does a lot of these, she charges 40%. But to that person who's probably going to have to go live with a friend or relative, or maybe on the streets, who knows where they're going, if you go and tell them, listen, I know how to get you $45,000, that's a game changer for them. Now, the really cool thing about doing overages is it costs very little money. To get the list is usually free, depends on what county you're in. If you have to pay for it, it's usually a very nominal amount. And sometimes you might have to pay for what's called a skip tracer. They track down these people if you can't find them. Sometimes you can find these people on social media. Sometimes you can track down some relatives. You can pull a title. There's different ways to try to find them. But if you can't find them, and there's a potentially really juicy paycheck and also somebody who's owed a lot of money from the government, it sometimes makes sense to hire somebody to go track them down. The cost of that will vary. In general, though, it costs very little money to do this strategy. And I can't think of anything more fulfilling than helping somebody who's very down on their luck. As a matter of fact, when I talk about my foreclosure fixers business, I remember there's one a client who called me a few months after I helped her. I put her into a less expensive rental property, and I helped her rebuild. And she called me a few months after I helped her and said, Mike, I didn't tell you this at the time. The day that I got your flyer, I was actually thinking of killing myself. And so I don't take lightly the things that we do as problem solvers, because if you help somebody with the obvious problem, which is usually money, you don't know if all, it's kind of like an iceberg. You see what's above the surface. There's a whole bunch of other things going on beneath the surface that we don't even know how many ways we help people. If somebody's having money issues, pretty good chance that relationships aren't working. They're probably fighting over money when they go into scarcity mode. Probably a pretty good chance that they're very stressed, depressed, maybe suicidal. And obviously you're not going to be in very good health if you're feeling that way. So we get to, as problem solvers, we get to help people in so many different ways. And so I absolutely love what I get to do. So I know there's a lot of people that sometimes feel guilty. It's like, oh, well, I don't want to, I feel bad. You know, if I go and buy somebody's house for a discount, I feel bad. You don't have to, because you could be putting that person in a way better situation. Or in the case of foreclosures and tax deeds, you're helping the county. There wouldn't be schools open. There wouldn't be police. There wouldn't be the hospitals if there weren't investors going to these auctions and picking up these properties. So I want to go and I know I've kind of fire hosed you with a lot of information in a really short amount of time. So I see there's a question here. I'm a realtor. What is the best way to get involved with investors here in South Florida? Realtors have a really good advantage. And what I mean by that is you're already on the front lines and you're going to meet with people that are selling their homes. And to me, if I was a realtor, and by the way, I was way early in my career, I decided to get my realtor license so that I had access to the MLS data, so I could do comparables and things like that. And so I know what it's like to be a realtor. But you have a really big advantage in some ways, because you're already trying to find listings. And if you're trying to find listings, the problem with not understanding the investor side of things is that you're leaving a lot of money on the table. Now, a really good friend of mine who's a realtor, I did some training with him, and I showed him some different ways that instead of taking the listing, sometimes you'd be way better off trying to flip that home as opposed to taking the listing. So as an example, he lives in Los Angeles, and there was a home that he probably would have made around $20,000 or $25,000 on if he would have listed it using his real estate license. Instead, he learned how to do a flip. He ended up purchasing that property. Now, as a realtor, you do have more disclosure and more paperwork for sure than a regular investor like myself. But he ended up taking that property and flipping it and making over $100,000. He made $112,000 on a property that would have made maximum $25,000 on. And so the best way to get involved with investors is to learn how to be an investor so that you can speak the same language. Now, even though realtors and investors are both in the same industry, they do things very, very, very differently. So a realtor looks at a piece of real estate a lot differently than an investor would. And I'm going to give you some resources later. I actually wrote an ebook, which I'll give you all for free as well. I wrote an ebook that talks about the top strategies you can do right now, even if you have little or no money, even if you're hunkered down. Oh, Stacy, you have access to pre-foreclosure properties. Yeah, you definitely need to read my ebook, because there's some strategies you can do that will make you a lot more money than listing them as a realtor. Sometimes, not every single time, but a lot of the times. And so I'll make sure that I send you a link for that. Unless, Jason, if you happen to have that handy, you can post that in the chat box. But yeah, if you have access to pre-foreclosures, you have a gold mine, especially if you have both your realtor cap that you can put on, and if you have your investor cap. That gives you a lot more options. And there's a lot of things that investors can do that a realtor can't. I mentioned earlier, I'll give you an example. I mentioned earlier something called subject to. And what subject to means is that you're going to take over somebody's existing mortgage without having to qualify for it. And the reason they call it subject to is you're buying the property subject to you being allowed to take over that mortgage. Now, what that means, imagine there's somebody, and this worked a lot, especially in 2007, 2008, 2009. There were a lot of people that had no equity in their property. But imagine somebody had a property worth $200,000 and their mortgage was $200,000. And they called up Stacy and said, hey, can you list my home? They can't actually list their home because they had no equity. They'd actually have to pay out of their pocket to list their home. So it actually make more sense to let it go into foreclosure than to try to sell on the MLS. But if they came across somebody like myself And let's just say, I'm going to make up really easy numbers here. Let's say their mortgage payment was $1,000 a month. And I knew that home could rent for $1,500 a month. I would take over that property subject to, and take over that existing mortgage. I'd now make the payments for them. I paid that $1,000 a month, but I'd rent it out for $1,500, and I keep that difference. I keep $500 a month. And in that example, I wouldn't have paid any money to buy that property. I would have bought it with zero down. And now I'm making $500 a month on a property that I put no money into. Now, if I knew Stacy back then, I would have said, hey, Stacy, if you ever see any properties where you can't list it because there's no equity, if you send it to me, I'll give you a couple of $1,000s. Well, Stacy just got another revenue stream. That's an extra couple of $1,000s on every deal that normally you wouldn't be able to do on your own. So there's lots of ways to create win-wins, but the best way if you want to attract investors is to understand investors. And I get people every day calling me up saying, hey, Mike, I'm a realtor. I want to represent you. But we don't speak the same language. They don't really know what I'm looking for. They don't know how to, serve me and add value to what I'm doing. Sometimes they'll put me on their list where I automatically get MLS listings. I don't have time to look through that stuff. So somebody who wants to work with a successful investor, you're gonna have to do a little bit of legwork and say, hey, here's a great deal. Here's where you might want, here's why you might want to buy it. And once again, if you found a pre-foreclosure that was way below market value, it might make more sense for you to actually wholesale it to me than to put it on the MLS and sell it to me through the MLS. You'd actually make more money that way in a lot of cases. So, but you're in a really good spot, being a realtor and having that investor background. But I'm going to send you. I'm actually going to post the ebook. Actually, if you go to my website, instead of me trying to find it, if you go to my website, which is Mike Wolf, actually, I'll put that in the chat box here. It's MikeWolfMastery.com. Oops, I can't type very well. All right, if you go to my website, there's a section there where you can download the ebook for free, and it talks about the top strategies you can do right now, even if you're stuck at home, even if you have very little cash. And it talks about the things I would be doing if I was breaking into the real estate investment game right now during COVID with the options that we have. And I talk about things such as the tax liens and deeds. I talk about wholesaling, and I go in a lot more detail. Now, does anybody have any other questions? I want to make sure, like I said, that we cover as much that's meaningful to you as possible. And I know Jason always has some great questions too, every time I come on here.
Yeah, I mean, Mike, you're doing a great job. And I want to ask you, what do you think that people should do with the moratoriums right now? How would you approach that, especially if you're buying like a single family property, a multifamily? Because some of these states have the moratoriums, like you mentioned, that into June federally, and some states are into March, and they could go beyond that. So how do you factor that into when you're purchasing a property right now?
Yeah, to be honest, there's some strategies I would do right now. If I was looking to buy a principal residence, in all honesty, in most markets, I would not be looking. I would rather rent. Like right now, I'd be selling my property. If I was thinking of selling, I might sell and then go rent somewhere, to be honest, because I think we're going to see, and once again, depending on the market, if you're in a market where a lot of people are moving to, if that's why the market's going up because people are moving there and there's jobs created, there's population growth, yes, then that market's probably going to continue to grow. But if you're in LA or New York or somewhere that's expensive and you see, and all your friends are talking about moving to Idaho, I would hold off and I would actually sell now while people are fighting over properties, put that money in the bank and use that to buy rental properties in another market. Rental properties in the right markets are awesome right now. We're likely to see rents increasing as, whenever you see people losing their homes, well, most of them are going to renting. And so there's going to be a lot of upward pressure in some of these markets, especially where there's jobs being created on the rental market. And we'll also see appreciation in those markets. So be careful what market you're buying in, because we are going to see some really good opportunities. And if your money's all tied up in a property that you way overpaid for because you got caught up in the frenzy of what everybody else is doing, you're probably going to be disappointed later on when you're going to, there's still opportunity because like I said, there's ways to do stuff with no money. But if you have a whole bunch of cash, that gives you even more options. And so I wouldn't play into that. And I'd also wait. There's going to be, imagine, I was talking about these auctions, the auction in Houston has been closed down for almost a year now. And let's say on average, 1,000 homes change hands every month. times 12. If it were to open up tomorrow, we'd have 12,000 homes that should have already gone up for auction, plus all the homes that have not gone up for auction because of the moratorium, plus all the new properties that should be going up. And so there's going to be so much opportunity out there. And sometimes, people are impatient and they just want to jump in. But there's going to be better deals down the road than there are now in a lot of the markets. But there's stuff you can absolutely be doing right now. I love rental properties. I love wholesaling. I love, if you can do a quick flip, if you can get into a property and get in and out of it in 60 or 90 days, there's good money in that. But I wouldn't be doing, for example, I wouldn't go develop something that's going to be finished in 2 years from now, because who knows what the economy looks like 2 years from now? Who knows what, where we are with this COVID thing and whatever else might be coming down the road. So, but stuff that wholesaling is very low risk. You put the home under contract. If you don't find a buyer for it, you walk away from it. And there's ways you can put that. It's in the ebook. There's ways that you can walk away from it legally and also not leave the person whose home you put under contract in a bind. There's ways to do it ethically, and you tell them up front, and you're honest and transparent with them. Say, listen, this is what I'm looking to do. I work with a lot of buyers. I'm going to see if I can find somebody else to complete this contract. And so, but all you really need is one strong buyer. And I'm your one strong buyer right here. If anybody finds a great wholesale deal, send it my way, and I will buy your deal if it makes sense. So that's half the battle, because people, I say, well, where am I going to find buyers? Well, there's two parts to the equation. One is you got to find deals, and two, you got to find buyers. Well, now you have a very strong buyer right here. And I also know a lot of other buyers. So, but there's some strategies that are awesome right now. There's other strategies like buying a principal residence in some markets like LA. I would absolutely wait if it were me. Now, I don't have a crystal ball, so if I'm wrong, it goes up. Don't say, Mike, you said this was going to happen. But if I've been through a lot of these, catastrophes, 2007, 2008, 9/11. I've seen a lot of ups and downs. I've seen a lot of times where people have been losing their homes. And I've prospered through everyone, and I'm still here to talk about it. So,
no, that's fantastic, Mike. And you brought up a point. Why don't you tell us the top 3 markets, if you're going to do buy and hold properties right now? What are the top 3 markets you recommend for buy and hold properties? And then do the same thing as far as, like, say, wholesaling or fix and flip. And what are the top 3 markets for those 3 things right now?
Yeah, well, here's a great thing: is wholesaling and fix and flip. You can do absolutely anywhere as long as you find a good deal, and it doesn't have to be where you live. There's different ways to find these deals, and it doesn't have to be close to home. If you find it close to home, even better, easier, and you're probably more familiar with that market anyway. But one of the things that you should get used to doing is when you're dropping off the kids to soccer. I don't even know if they're doing that anymore right now, and depending, I guess, where you live. But when you're in your car driving around, going to the grocery store, if you see homes that look like they've been neglected for a while, those are your prime targets for wholesale and flip deals. So while you're driving around, when you see these homes and you're seeing quote unquote ugly homes and homes that look dilapidated, that's where the money is. The pretty homes are a lot harder. Those people there's pride of ownership. It's harder to do a deal. Sometimes you do subject to deals on the pretty homes, but usually the other strategies, the most distressed sellers are where you're going to get the best deals. But you can do that in absolutely any market. Now, if you're buying and holding, that's a different story. And the reason for that is one, you want to be in the path of progress, as I mentioned. I'm going to give you the 3 things you need to look at before you pick a market. I'm going to tell you my favorite market, and then I'll tell you how I came to be in that market. So my favorite market's Atlanta. I've already mentioned it. And the reason for that is there's 3 things I look at when I'm picking a rental market. Number 1, first and foremost, before I even look at any numbers, before I look at anything, is it landlord or is it tenant friendly? Now, what I mean by that is if you bought a home in California and you get a bad tenant, even before COVID, it would take you often, I know somebody, it took them almost a year and a half to get rid of a tenant that wasn't paying a dime. Now, I don't know about you, but I've never once had my bank say, hey, Mike, I hear your tenant's not paying. Don't worry about making your mortgage payment. I've never once had that happen in 31 years of real estate investing. So you're still on the hook for payments, for your mortgage, for the property taxes, for the insurance. That's still coming out of your bank. And if you don't have any money coming in, I don't know how you last a year and a half unless you have a lot of reserves. And that's going to wipe out a lot of people, maybe even put them in bankruptcy. So the first thing you look at is a landlord friendly or tenant friendly. Atlanta, I love it's a very entrepreneur friendly state. To get rid of a bad tenant usually takes us less than 3 weeks. And by the time, we can get rid of them and have a new tenant in before the next rent payment is due sometimes. So that's the first thing you want to look at. Number two thing you want to look at, how I've created my wealth in real estate is by having the homes that I bought go up in value, and that's appreciation. Now, appreciation comes from exactly what I told you earlier. It's simple supply and demand. If you see a whole bunch of people moving to a place, if they hear that, hey, Amazon is opening up a new headquarters somewhere, or Walmart's opening up something, wherever there's jobs created, that's going to be a lot of times where people are going to move to, and never more in history than probably right now, with all these businesses shutting down, temporarily, and maybe in a lot of cases permanently. A lot of people are going to be looking to rebuild, and they're going to need work. And Atlanta, actually not just Atlanta, Georgia in general, the government is very, very business friendly. And they know that if they give tax incentives to businesses, the businesses are going to hire a lot of employees, so they can tax all the employees to death. Now, the good news for us as landlords is if our tenant loses their job, but there's lots of other jobs being created, they might get behind for a little bit, but they're not going to be behind forever. If you're in a place like, I'll pick on Detroit for a minute, no offense to anybody who lives there, but if you're in a market where it's mostly one industry, automotives, for example, well, in the middle of a pandemic, there's probably not a lot of people saying, I think we're going to buy a brand new car when they just got laid off of work. And so markets like that, if somebody works at Ford and if they get laid off, they're probably not going to be hiring at GM either. So you want to be in a place with multiple industries, and Atlanta is head office to Coca-Cola, Turner Broadcasting, Home Depot, Delta Airlines. Let's use Delta Airlines. We know that a lot less people are flying right now. Delta Airlines has laid off a bunch of people. But if somebody at Delta gets laid off, they can go work at one of those other companies that have offices there and get back to work and start paying rent again. Also, the cost of living is low there. So it's a really good place to be investing for that reason. Now, the third thing I look at is quite often the first thing that people look at. And the third thing I look at is how much cash flow am I going to get while I'm holding this property and waiting for the market to take off. And this is what allows your investment to be sustainable. If I have enough money coming in every month to pay all my bills and hopefully have some money left over after, that's how you can keep your investment even when the market goes, even if the market were to drop, even if your property were to drop in value, as long as the rent is paying all the bills, you're never going to be in a position where you have to, fire sell that property and give it away for pennies on the dollar because you're in trouble. And a lot of people get into trouble because they look for that third thing. They look for the cash flow, which is good, but it leads to what I call paper returns. Quite often we look at markets that give you really good cash flow in theory. Once again, I'll pick on Detroit because I already picked on them. If you look at homes in Detroit, and I bought some there, so I'm speaking from experience, they did not go well. But if you buy homes there for $30,000 that look like they're supposed to rent for $900 a month, what ends up happening when there's a whole bunch of people getting laid off is when they don't have jobs, people are going into the homes and they're stealing everything from it. They're stealing hot water tanks and furnaces and copper, you name it. People are breaking in because they're selling that stuff just to keep, pay for their basic needs. So number one, you're going to have a lot of wear and tear on your home. You're going to have a lot of vandalism in markets like that. And you're quite often going to have tenants that pay the first month or maybe 2 months if you're lucky. Then after that, they're not going to pay you again. And so some of these markets look really good on paper, but in reality, they're not. So if you're going to places where there's good appreciation, eventually you're going to be able to buy more properties. The best way, when you see people that have a really big portfolio of properties like myself, it isn't because they stayed at their job and kept saving up down payments and then getting a mortgage and buying a home the traditional way. It's because they got into markets. Before I was in Atlanta, I was in Phoenix. And before I was in Phoenix, I was in Vegas. And so Vegas, from the time I got into the time I got out, I was buying properties. As I mentioned, that market was hit tremendously and it lost a lot of value. And I went and I picked up a whole bunch of properties. And we all know what happened. It came back, of course. Real estate's very cyclical. It comes back. So I made a lot of money there. When people started to fight over properties, I took that money. I went to Phoenix and I did the same thing. I bought low, sold high. When I went from Phoenix to Atlanta, for every home I sold in Phoenix, I could afford to buy 2 in Atlanta without taking a single dime out of my pocket. And that's because I used those three criteria when I picked my market. And I looked at where's it likely to boom first. And usually a market that gets hit really, really bad, usually things overcorrect in both directions. When people think things are really good, like right now, there's a scarcity of homes and people are all fighting over them. It's going to correct too high. It already is too high in most markets. And then it hits the ceiling and all of a sudden it comes bouncing down. It comes down very, very, very quickly. When it hits bottom, when Vegas hit, 80% below what it used to be, it went way too far. And people said, why are we paying rent? The cost of ownership is so much less. And they jumped into the market and drove that market back up. So you want to be in the path of progress. You want to you want to be selling when everybody's fighting over stuff. You want to be buying when everybody's saying, oh, we're terrified of real estate right now because of what's going on in the market. And if you do that, you're going to be able to build up your portfolio a lot more quickly than if you try to make that extra $50 in cash flow a month and pick the wrong market. So it's very, very important. So I can't really give you my top 3 markets. I'm very heavily invested in Atlanta. I love that market. Other markets that I would be keeping an eye on would be places like, I like Kansas City on the Missouri side, not on the Kansas side. Reason for that, rule number 1, go where the laws are favorable for the landlord. On the Kansas side, it's favorable for the tenant. On the Missouri side, it's more favorable for the landlord. I like that market because if you were to throw a dart at a map of the United States and hit the bullseye, you're pretty much going to hit Kansas City. And when you're in the middle of the country, it makes a lot of sense logistically if you're shipping stuff. So there's a lot of warehouses there for places like Walmart, all the big operations. They send all their stuff out across the country from there. It's a very affordable market. It's a friendly market. The prices are pretty reasonable. It's not going to appreciate though as quick as Atlanta, which is why I love Atlanta. Atlanta's much bigger population, a lot more people moving there more quickly. But that would probably be my second choice right now. And I don't even know a third choice, to be honest, because to build proper teams. And by the way, you shouldn't invest somewhere just because it's close to home. Invest where the advantages are best, which means you're going to need a team. And that's some of the stuff that I do for my clients. I build teams. I let my clients use them. And we sell turnkey properties in Atlanta, by the way. But you're going to need a team, but you want to go where the opportunities are good. So if you live in LA, for example, you want to buy a rental property, you're putting yourself in a lot of danger potentially. One bad tenant could create a lot of issues for you. And also you're in a market that's likely to take a bit of a hit now over the next few years as more and more people are seeming to leave there. So anyway, that's how you can pick the market yourself. Look for those 3 criteria. And that's really going to be where the money is. Any other questions? I know once again, we're going pretty fast here because I have a very short time, but I want to cover as much ground as I can.
What would be some good research tools that people can use when they're researching markets? What databases, if you can give us a few databases, that'd be great, that they can go in and do their homework and research before investing in a market. And then, because as we know, it's important to build your power team, especially if you're invested out of state. So what are some places that they can look to research single family, multifamily? I know you can go to assessors websites and different things. You can use different sites, but what do you use typically, Mike?
You know what I like to go right to the source. I usually will, if I'm thinking of a new market, I'm going to call up an attorney and or title company in that market, and I'm going to call a property manager because I want to find out what are the laws around eviction. How quickly can I get rid of a bad tenant who might be damaging my property or not making any payments? So I can go research, but when you go research, you get a whole bunch of people's opinions. I want the actual truth. I want to talk to somebody who actually does evictions, find out the process, and see what it takes. So when I'm picking a market, I'm going to talk to, I'm going to also find other investors. And there's so many different forums online these days and social media. It's very easy to join meetup groups. We live in really the best times ever to be real estate investors or problem solvers, as I like to say. There's so much information online. And there's also a lot of, I find the most successful investors, they're happy to share. They're abundance minded. They're not scarcity minded. I don't say, hey, Jason, I'm not going to come on your show and share, what I do and my secrets with your group. I don't want competition. There's so many properties out there. And if we're problem solvers, I want everybody. One of the things that I love to do is train other people on how to do this ethically so they can go be, helpful to people in trouble. And if we're actually looking to make a difference and we know that there's enough to go around, there's obviously enough people that are struggling right now, and even more probably 6 months from now than today. if our goal is to help as many of these people as possible, it makes sense to share resources. And I find the most successful people are happy to share, and the people that are scarcity minded, they tend to come and go. They're flash in the pan. Often they might get a deal or two, but because they don't share, nobody wants to work with them. They never end up doing joint ventures. And really, real estate investing is a team sport. So you'll find the most successful people are going to be happy. If somebody called me and said, "Hey, Mike, I need a roofer in Atlanta," of course, I'm going to tell you who I use. If somebody comes and they need some of my team somewhere, of course, I'm going to be happy to share, as long as obviously, they're not so busy that they can't work on my properties, but that's not normally the case. Normally there's plenty to go around. So I find that's the best way. Find other investors. Meetup.com is a great resource. And also, if you're picking a market, if I was starting fresh in a market, first thing I'm going to do is call an attorney in that market or title company and say, "Hey, listen, I'm looking to do wholesaling. What can you tell me? What kind of contract should I be using? Do you see a lot of these deals, coming across your desk every day? What does it look like?" And they're going to give you the straight goods. And quite often they'll help you for free, because they know if you become successful, you're going to send them all your business. So that's probably where I would get started. And once again, depending on what strategy you want to do, but in general,
some really good resources as well. And you want to develop those relationships, especially develop some relationships with some realtors. If you can develop some really good relationships and get pocket listings, because that gives you an edge up on your competition, especially if they're making money with you.
absolutely. Yeah, absolutely.
We get a lot of great information here. Let's see. You have some more questions in the chat for Mike Wolf. Right now, interested in. I think Stacey, I'm interested in both working with investors and being an investor, is what she said.
Oh, sorry. Can you repeat that one more? Oh, here we go. Can you repeat that one more time?
Yeah. Let me open the chat. Stacey says, I'm interested in both working with investors and being an investor. So she's a realtor. She's interested in working with clients and also being an investor herself.
Yeah, we covered that earlier, and I was just explaining that once you speak the language of an investor, once you understand what investors are looking for, and there's a whole bunch of different types of investors. Obviously, somebody who's a buy and hold investor will be looking for something much different than somebody who's looking to flip a property. And so number one is to figure out who do you want to serve, what part of the market do you want to serve, and then learn to speak the same language, and maybe be, if it were me, for example, I definitely become an expert at wholesaling, because if you're looking for listings anyway, why not have that other option where you might be able to make more money? I'd also learn how to flip homes, because like I said, I have my buddy in LA, and he's making now, whenever he goes to a listing appointment, he goes there as an investor first and a realtor second. So his first thing he's going to try to do is try to either get a flip from it or a wholesale deal. If in the rare occasions he can make more as a realtor, he'll take it as a listing, but he doesn't do that an awful lot anymore. And so it's all a matter of having the right the right strategies in your tool belt. That the more things if you own a garage, if you're a mechanic and you know how to do oil changes, that's great. But you know how to do that and transmissions, that's going to give you another revenue stream. If you know how to do, the more things, the more tools you have in your tool belt, the more successful you're able to be, the more people you're able to help, and also the more money you're able to make. So I would really recommend, at the very least, read my ebook. It'll give you a good starting point. And then, feel free, if anybody has any questions. I want to cover everybody's questions, but we have a very short amount of time. Feel free to email me. I'm going to put my email in the chat box, and I'm also happy to help you with any real estate investment questions you might have. If you're in the middle of a deal, or you have a potential client as a realtor that you're trying to work with, you want to know how to attract them, I'm more than happy to help you with any of that stuff.
No, Mike, I think that's fantastic. And one of the things is, as people look for properties, and Mike's a great resource with that, because Mike is an investor, and you have a good deal, you should definitely bring it to Mike, because Mike can workshop the deal with you, and he'll invest your wholesale deal as well. And so I guess I talk a little bit about, because we still have about 9 minutes here left, some of the common pitfalls you see investors make out of the gate to avoid, some of the things they should be doing right. We know we research the market. We look at developing contacts and reaching out to attorneys. But what you see is a common mistakes a lot of people make when they invest at first thought, or they try to jump into it too soon, or not know what they're really doing when they get in. Because you made some of these mistakes yourself, and you've mentioned that.
Oh yeah, I've made every mistake in the book over the last 31 years, just to be clear. Like, I have made so many mistakes, but the good news is I don't like to make the same mistake twice. So I look at mistakes as lessons. Though I think the biggest mistake is trying to do something without really understanding how to do it. And so that's why I recommend the first thing you want to do, actually the first thing you should do, even before you call a lawyer or title company or property manager, probably the first thing you should do that I didn't do was get a mentor. And like I said, I waited till I screwed up, and that first screw up was very expensive, and the screw up actually cost me more than the mentor. So I'd recommend finding somebody who you know, like, and trust to teach you. And that's why I created that ebook. I'm also going to talk to you about a 3-day event that I've got coming up in a minute here. But get somebody who you know, like, and trust to teach you how to do the strategy properly. Some of them, there's not much danger in. If you screw up a wholesale deal, you'll have wasted time. You probably won't lose much money as long as you write the contract properly. If you go and you're in the middle of a flip and you do what I do on my second deal, after I had that big success story, remember I lost a lot of money. If you go and try to do a flip without really understanding what you should be looking for, if you try to go to an auction, a real estate auction, without knowing what you're doing. I remember I was at this one auction, and I do these 4-day, before COVID and after COVID again, hopefully sometime soon, I do these 4-day trainings where I take people to Houston, Texas. We spend a couple of days in the classroom, and then we actually go to the auction live. And I remember there was one property that we determined our maximum bid on this property was going to be around $90,000. And I remember one of my students was bidding on it, and it was 70, 75, 80, 85, 90. People were fighting over it. And then my student stopped bidding because that was a maximum bid. It ended up selling for somewhere around 150,000, not to one of my students, fortunately. And I went to the person who won with the high bid and said, "Hey, listen, congratulations on getting the property. What can you tell me about it?" And he goes, "Oh, I think I just got the smoking deal." I go, "Oh, why so?" He said, "Well, on Zillow, it says it's worth 170. Well, rule number one is Zillow is not where you go to get your comps. Looking at what Zillow says can either be way low, way high. So I see people losing a lot of money because they jump in without really understanding what the due diligence steps are. And it drives me crazy because I see it every time, and I witness people doing it, and I almost feel like saying to them, don't bid anymore. But you know what? Sometimes they just have to learn by screwing up, as did I. So number one is get a mentor. Number two, I always recommend getting an attorney wherever you want to do business, whatever strategy you want to do, get them to help you with the paperwork. And quite often they'll start sending you deals. If they know, hey, this guy wants to do or girl wants to do wholesale deals, and they see something that comes across their desk, they'll say, "Hey, what do you think of this?" And they'll sometimes connect you. But more importantly, they'll give you the right paperwork to protect yourself. And a lot of people, they don't write up the contracts properly, and that will also get you in trouble. So those are kind of my tips on if you're just getting started. Those are the two biggest takeaways I can give you for now. Oh, I think we lost Jason. So there you are.
Yeah, I'm just letting you talk, Mike. So why don't you go into your 3-day boot camp coming up and how they can plug in and be involved with that? Since you have a few minutes here left, and we want to see how you can be involved with Mike's 3-day boot camp and everything. So yeah, go ahead, Mike.
Okay, so quick story. When normally I'm a nomad. Normally I travel full time. Actually, right now I'm in Cancun, by the way. But I'm normally I travel full time, and I do a lot of volunteer work, and I don't really work that hard on my business anymore because I have teams that do most of the work. When COVID hit, I ended up going home to be with my daughter and grandkids and the rest of my family. And for the first couple of weeks, I was just kind of sleeping in every day and watching Netflix like everybody else is doing. And then I started to get tons of calls from friends and summits like Jason and podcasts, people wanting to know what's going to happen with the economy, what's going to happen with real estate. And as they started to shut down the global economy, I decided, here we go. I was thinking, here we go again. And I decided, you know what, I'm probably going to set up Foreclosure Fixers again once a moratorium on foreclosures ends. And then as I started to get all these calls, I thought, well, I mean, I can help so many families. If I set up foreclosure fixers, maybe I'll help 50 families this year, 100 families if I'm really lucky. But what if I trained a whole bunch of other people on how to invest using these different strategies, how to invest ethically? What if we created a movement of problem solvers that were ethical, that were on the front lines trying to help other people as they also created a win for themselves? And so I ended up, for the first time ever, doing online trainings. And the first time I did it was around 10 months ago. And I charged $1,000 and got a lot of great feedback. But I had some people saying, well, I'd love to learn how to do this, but I honestly don't have the $1,000 right now because I just lost my job. And so I decided that I wanted to make this accessible to everybody, but I wanted to put some price tag on it. If you get information for free, usually you don't do anything with it. Usually you don't put any value on it. And so I've now made it $97, and we hang out for 3 days together. And I teach you a whole bunch of different strategies, how to do things properly, from wholesaling to subject to all the stuff we talked about today. I can go in a lot more detail in 3 days than in 1 hour, obviously. And all the stuff in my ebook, I can go in a lot more detail. And I bring in a whole bunch of other guest speakers. We talk about, multifamily investing, flipping, you name it. As much as I can cover in 3 days, that's what we do. And so we get to, much deeper dive. It's like I said, it's $97 all 3 days. And Jason, I don't know, do you have the link for that for people to sign up?
No, I don't actually have the link for it.
Okay.
But if you want to put the link in the chat, Mike, so people can sign up. And so when people view the webinar, they can sign up, and people on the webinar right now can sign me up. Stacy wants to sign up right now.
Oh,
so
okay. Oh, great. So, I love teaching realtors, by the way, because like I said, I used to be one, first of all. And second of all, I know that a lot of realtors leave money on the table when they don't understand. And I remember actually when I got my real estate license, I don't know if they still teach this. They said, "Oh, don't work with investors. Don't work with investors," because there are a lot of people out there that want to be investors, but they waste a lot of realtors' time. But I can tell you that if you get a successful investor, you don't really need any other clients, because successful investors are buying a lot of homes every year, and the other ones are. If you get a typical person who's looking to buy a home, they might move once every 5 or 7 years. And so I think it's really bad advice when the real estate board teaches not to work with investors. But in any case, I put a link for the ebook. I put a link for the summit. And so if you want to go and sign up, like I said, it's $97. Send me also an email if you have any questions, and let me know that you saw me on Jason's summit. And I'm happy to get on a call with you or answer by email or whatever. If you're stuck with something, I'm happy to do that. And I just like to see everybody win, because there's so much opportunity. Like I said, there's a big transfer of wealth. And the fact that you guys are here and gals are here on a Sunday, taking time out of your a lot of cases day off to learn, that says a lot about you. That when I first started, I was a know-it-all, like I said, and I thought I knew everything, and that was my biggest downfall. So I want to congratulate you all for being here and learning and furthering yourselves during these crazy, chaotic times. But it'll pay off in the long run, this education that you're getting. And thank you, Jason, for always putting on these great events and having me here. I appreciate that.
No, I appreciate you, Mike, coming in here and sharing your knowledge and expertise with everyone here at the summit. And like I said, a fantastic job today. You want to reach out to Mike Wolf, get a copy of his ebook, sign up for his 3-day event. It's $97. That's not a big investment. A great investment for your future. So you want to sign up for that and reach out to Mike. Mike's a great resource. We love him coming here and speaking at the High Performance Summit and everything. So I just want to thank you again, Mike. Does anyone have any additional questions for Mike before we go on to our next speaker? If anyone has any additional questions, now would be a good time. We'll have next speaker is going to be Lisa Rodriguez. Yep, Lisa said great job, Mike. So,
Lisa.
Anyways, let me just make sure I check the chat on here. And yeah, I don't see any additional questions right now, Mike. But again, I just want to thank you so much for coming on and doing a fantastic job here at the summit. We look forward to having you future summits and everything like that. Thank you so much, Mike.
Thanks again, and thanks for the great questions, Stacy. And oh, can you apply
There
for?
was one more, Mike, that says, "Can I apply your teaching in a Canada's market?"
Canada's market. Well, surprisingly enough, I am actually Canadian. I'm from Calgary, and I do all my investing in the US. So I'm going to teach you as a Canadian how to invest in the US, but most of these strategies will work in Canada. Wholesaling, absolutely. Flipping. Some of the things like tax deeds, not so much, because we don't really have those auctions, at least not good ones in Canada. But almost everything else that I teach can be done in Canada. But after you learn from me, you're going to want to do it in the US anyway, and I'll show you how you can do it across the border. And like I said, I'm a Canadian, but I haven't done a deal in Canada in a long time because it's so much more lucrative south of the border.
Mike, yeah, so great. Like I said, reach out to Mike Wolf. Thank you again for Mike. Thanks again. We're going to now go into our next speaker, and I want to introduce Lisa Rodriguez. She's the Director of Retail Counsel from NuView. She's going to talk about how to buy more real estate using your IRAs. And this is a great topic, and we're so happy to have Lisa on at the High Performance Segment. Welcome, Lisa.
Thank you so much. I appreciate the opportunity, and I appreciate those of you that are taking time out of your Sunday to be here. So thanks, Jason.
No, welcome. So I'm going to turn over to you, Lisa, and you can share your screen with everyone in the audience as well. So here we go. Lisa Rodriguez, welcome.
Thank you. Give me just a moment to get my screen share working here. And speak to you all about how to buy more real estate using a self-directed IRA or your solo QRP or solo 401k. If you would all use the chat function just to tell me where you're from so I know where you are. I saw Stacy said South Florida. Anyone else want to share? I'm actually in Central Florida and been here for about 7 years. Was born and raised in Miami, Florida, just to give you a little bit of background. And let's see here. Just to get into the presentation, I do want to say that I am not an attorney. I am not a CPA. NuView does not provide investment advice or endorse any products. We're actually not a fiduciary. So all information that we provide is for educational resources. And we do encourage you anytime you have an investment that you're seeking out, that you do your due diligence and that you speak with those that would give you the best advice. So NuView Trust Company, we are a custodian just like Schwab and Fidelity, TD Ameritrade, and those companies. The difference is that with those companies, you can use your IRAs or your individual retirement accounts to invest in things like stocks, bonds, mutual funds. With NuView, you actually have the opportunity to invest your IRAs into alternative investments such as real estate or private lending, private stock. And we'll get a little bit deeper into that later. But I just want you to start thinking about that. So for those of you that might have an old 401k laying around, or, unfortunately might have been laid off during COVID, those are funds that you can actually roll into an IRA with NuView and start utilizing those funds to get returns on your investment. So we have been in business since 2003, and we have 2 offices. One is in South Dakota, that's our compliance office. And then our administrative office is here in Florida, in Longwood, Florida. For those of you that know, we are about half an hour away from Disney. So that's a good reference point. Most people know where that is. And we currently custody $1.5 billion in client assets, have about 10,000 clients. And what we pride ourselves on is being simple, available, and responsive. And we want to earn a relationship with our clients. We have a staff meeting every Monday. We talk about how many people actually got a live person on the phone. So when you call our office, there is a tree that's going to ask you, existing client, new client, those kind of things. But once you pick, 98% of the time or more, the phones are answered with a live person. So we pride ourselves on that. And our core values are very important to us as well. Our 4 core values are passion, integrity, serving others, and accountability. So we do use that also in our everyday practices here at NuView. So this picture right here reminds me of me and probably many of you, right? I would say that I would consider myself pretty financially savvy, but I can tell you that I don't really know or understand the stock market. And so for me, when I think about the stock market, I kind of compare it to casino, right? So for example, you go and you're at the blackjack table and you might be doing really well. You're, going and going, you're on a run, you're doing well. And then what happens the next hand, it's bad. The dealer wins, you're losing, and either you walk away or you stay there and you try to make your money back. And it goes on and on. But this right here just kind of shows what most people's feelings are. I mean, they usually put their money with someone that they trust or an advisor that they feel has done a good job in the past and would probably do a good job for them. But do you really understand what's going on with your money? And for those of you that are real estate investors or realtors, I want to bring this up to you because I think that people don't know that being able to invest in real estate with your IRA is an option. I didn't know that it was an option. And I was in the insurance industry for 19 years. I actually worked with a lot of real estate investors, realtors, lenders. That's how I built my business. I owned my own agency for 5 years. And I didn't know that this existed. And had I known 10 or 20 years ago, which I hear that very often, if I only knew that this existed, I'd be in such a better position than I am now. So my job is to go around and talk to you about the opportunity and the availability. And it has been around since the 70s. But in my opinion, it's the best kept secret, right? So let's go ahead and continue. This slide, I would like to speak to you about an example, right? And why should you do real estate investing in your IRA, right? What is the reason? And I'll tell you that the reason is the power of compound earnings, right? So right now you have a deal. Let's just say that you found this amazing deal. You have $1 and you're going to invest that dollar. And every year that dollar is going to double. And so for 20 years, your dollar is doubling. So $1 to $2, $2 to $4, $4 to $8. After a span of 20 years, you're going to have $72,000. So anybody that turns $1 into $72,000 in a 20-year time frame is going to be really excited about that, right? I'm going to share it with all my other real estate investment friends, and we're going to have, conversation, and we're going to be happy about that investment. And that dollar truly doesn't turn into $2, right? If you look at that table there, that dollar actually turns into $1.75 because Uncle Sam's going to come and take 25% of your earnings. And then the same $2 or $1.75 doesn't turn into $4, right? It turns into $3.06. And you can see the numbers as you go. But I'd like to call everybody's attention to the chat function, right? Because in the chat function, I want you to tell me, if I were to do this same deal, dollar doubling every year for 20 years, and I took it and I did it inside of a Roth IRA account, what would that dollar turn into after 20 years? So if anybody go to the chat now and just kind of guess, put a guess in there, it's okay. I'm going to just give it a couple seconds here so we can do that. And you can see what you think it would be: $1, $2, $2, $4, so forth, so on, in a Roth. All right, so give me 1 second. So if I put it in a Roth, that same dollar doubling over 20 years is actually going to turn into $1,048,000. $1 million. So I don't know about you, but I want to be the investor that says, I actually did this deal inside of my Roth IRA, and rather than making $72,000 after 20 years, I walked away with $1,048,000. The same dollar, same investment, same time frame, different outcome, right? If I took that same dollar and I did it inside of a traditional IRA, so traditional IRA is a pre-tax account, the Roth IRA is a post-tax account. If I did it inside of a pre-tax account, and then when it came time for distribution, let's say I took the full million at once, maybe I'm taxed at a 40% tax bracket, I'm still going to walk away with about $600,000. Again, compare it to doing what you're already doing, right? You're investing outside of your IRA. You're making $72,000, but consider walking away with $600,000 or over $1 million. And that's the difference with investing outside of your IRA versus investing inside of your IRA. So let's look at the different account types and what their contribution limits are. So we talked about IRAs, individual retirement accounts, right? So some of you have 401ks, you're a W-2 employee, and you can, if you leave that job, if you get laid off or something happens, then you can usually, you would take your 401k with you and you could roll it into an IRA. We talked about that earlier. For some of you, you can actually have a 401k and also have an IRA separately, right? So you can contribute either $6,000 or $7,000 depending on, your age, right? And I'll go through the contribution limits here, but I don't want the contribution limits to get confused with what you're allowed to roll into an IRA or what you can transfer into an IRA. So if you have a traditional IRA with Fidelity or Schwab or any of those companies, and you decided that, the stock market's a little bit too volatile for me, I really want to get out of it. I don't want to do that anymore. I want to get into something that I have experience with and that I have knowledge on, and I want to start investing in real estate. Well, you can transfer those funds to NuView and open an IRA with NuView. Same type of IRA. If you have a traditional and you want to bring it over as a traditional IRA, you can do that. And you don't have to bring all the money. If you have $500,000 in an IRA account and you want to bring $250,000, you can do that too. So don't confuse contribution limit with rollover or transfer limits. Contribution limits are specific to how much you can contribute to an IRA on an annual basis. So for traditional IRAs, it's the $6,000 or $7,000 depending on age. And the traditional IRA is going to be your pre-tax dollars. Okay, so if you make $100,000 and you want to contribute $15,000 to an IRA, you can try to see what actually not 15, sorry, $6,000 to the IRA, then you would actually have a deduction on your taxes for the $6,000, right? The Roth IRA is post-tax dollars. So you've already paid taxes on this dollars. Now you're using it for post-tax dollars, and that's what you're contributing to your Roth IRA, and you won't see a tax deduction for that. The SEP and the Simple are usually for business owners that have employees, want to beef up their retirement alongside of their employees. The health savings account, anyone that has a high deductible health plan is eligible to have a health savings account. And yes, you can self-direct those as well. Educational savings account, some known as Coverdale. Again, you can self-direct those accounts, and people, usually parents, grandparents, aunts and uncles, establish those accounts for children for their educational savings. So those are all products that we offer here at NuView, and those are all accounts that you can self-direct. Now, the solo QRP, also known as solo 401k, is a great plan as well, and we do offer those. You can adopt a plan here at NuView for your business. And the contribution limits are a lot higher, right? So $19,500 is your employee contribution, and $26,000, I'm sorry, and you can do up to $57,000 on your employer contribution, and that's total, including employer and employee contribution. So solo QRP is good for business owners and individuals that have self-employment income. They don't have any common law employees, so no employees that work over 1,000 hours a year. And it can be adopted by any self-employed business, including sole proprietorships, LLCs, C Corps, S Corps. So it's a really good plan for anyone that is self-employed, realtors, landscapers, engineers, consultants that don't have common law employees, sometimes mom and pop shops. These are great for the solo 401k plans. They were established because, a lot of the smaller companies don't have the money to establish these 401k plans like the larger companies do. And they still wanted to have opportunity to save for retirement purposes. So That's what the solo QRP, solo 401k plan is. And those plans you can also self-direct. You can self-direct and you can invest in stocks, bonds, mutual funds. If you open that 401k bank account at a brokerage firm, you can do both. So very versatile plan. I recommend if you're self-employed and are eligible to look further into that plan. It's a great opportunity for you. Here are the benefits. So the solo QRP, you would be exempt from UDFI taxes when you're buying real estate with leveraged debt. So if you take a loan alongside of your solo 401k plan, you know, the money that is not in the plan in an IRA is generally taxed with UDFI taxes. In a solo 401k plan, when you're purchasing real estate and you're using leverage or debt to acquire that real estate, in the solo QRP, you do not have that UDFI tax. So also has the highest Roth contributions. You can contribute up to $19,500 towards Roth contributions. There's no mandatory reporting to the IRS until the balance of that plan is $250,000. You get automatic checkbook control, so you have the control of the account and you can write a check on the spot if you're like Mike was talking about with tax deeds and tax liens. If you're at the auction, you can write a check immediately using the bank account that you established with your 401k plan. So the other thing is with solo QRPs or solo 401ks, you can borrow, take a loan, personal loan on your own money, right, in your plan, up to 50% or maxed out at $50,000. And I covered that you can invest in both traditional and alternative asset classes. So I like to think of the IRS as me when I was a mom with young children, right? So the IRS doesn't really tell you what you can do. They just want to tell you what your limitations are. So for me, when I was a mom of I have two boys, they're currently 7 and 9, but when they were smaller, and we would go to different places like my sister's house or my parents' house, I would have to tell them, you know, don't climb that. Don't jump on that. Don't open the refrigerator. Don't, right? It's not do this or, you know, let's come over here and do this. It was more, don't do that. Don't do that. And that's how I feel the IRS communicates with us, right? So I'm going to go over what the limitations are. There are few, but I still want to cover that with you because a lot of people have these questions immediately. So your IRA cannot purchase life insurance and it cannot purchase collectibles. So life insurance is for after you pass. IRAs or for retirement purposes, right? So that's one reason. And then collectibles, it's just very difficult to put a dollar amount on a collectible. You don't really, you know, there's different assessors or different appraisers that are out there, and everybody's going to have a different opinion of artwork or antiques or coin collections. So the IRS just doesn't really want to deal with that. And they say, you know what, we're just going to say these are the two limitations that we have for you. The other limitations are who can do business with your IRA, right? So yourself, your spouse, kids, grandkids, parents, grandparents, spouses of those individuals, and businesses that are owned by those individuals. That's the limitation. So as long as you're not doing business with them and your IRA or yourself and your IRA, then you're good. So for example, if you bought a property in the name of your IRA, you couldn't purchase that from your parents, right? Or you couldn't buy that property and then rent it to your children, right? Because it's too close. So want to keep all your IRA deals at arm's length. And so just keep that in the back of your mind, okay? But those are the only limitations as far as people. So there's millions of other people that you can do business with your IRA. Let's talk about what you can invest using your IRAs here at NuView Alternative Investments through self-directed IRAs, right? So real estate, so that's raw land, single family homes, apartment buildings, multifamily, commercial property, the list goes on and on. Private stock, so who out there likes to watch Shark Tank? I don't know, I'm a fan of Shark Tank. So let's just say that you have a friend that you know has invented a product and they're going to start up a business. You can actually go ahead, Jason says he likes Shark Tank. You can actually go and invest in that business. So that's another thing that you can do with a self-directed IRA. You can invest in partnerships, limited partnerships. If let's say that's, there's a group of people that are raising capital to go make a real estate purchase for commercial property. And those are, usually cost more than a single family property. So you can have partnerships, people joint venture. Maybe your strength is not going in and working on the property, which is good because we don't want you to do that when you buy a property in your IRA. But maybe the strength is that you have the money, but you have a really good trusted person that that's good at the flip side of it. Maybe they're a contractor or something. You can joint venture with them. You can lend the money. They can do the flip. You guys can agree on a percentage of return. And then when the property sells, that return goes back into your IRA, and that's how you grow it, right? Any expenses that a property incurs are paid from your IRA as well. So you can do tax liens and deeds. Mike, if you're still on, that's another thing that you can use your self-directed IRA for. You can invest in LLCs. Again, a lot of, sometimes when you're raising capital and you want to make bigger purchases, people go in it through LLCs. I've seen hotel purchases that way. Also precious metals. You can invest in things like gold, silver. And so we do have depositories that those metals are held in. And you can also be the bank. You can be a mortgage, a note holder for someone. You can lend them the money to go purchase a house, right? And what we're seeing a lot more of, is I'm getting more calls on this, is cryptocurrency. So you can actually take your IRA and invest in cryptocurrency. So this just kind of shows a little bit, like I was talking about, rehab, rental, storage units, multifamily, undeveloped land. I mean, the list goes on, but yes, you can invest in real estate using your IRA. So I wanted to illustrate what this looks like in an actual example. And for me, I thought this would be a home maybe in Central or North Florida. You can purchase it at $150,000. So let's just say that your IRA has $175,000 in it. You brought it over to NuView. You wanted to make a purchase. You found a house. And so you went ahead and purchased that house for $150,000. So you decide that you want to keep the house for a couple of years, see how it goes. You're going to charge $1,500 for rents. That's what the market value is in the area. So $1,500 a month times 12 months a year, you're making about $18,000 a year. Let's say that your property taxes and your insurance is going to cost you about $3,000. So you're walking away, let's say, about $15,000 a year. Now, do you have to pay capital gains when you purchase a property in your IRA? That answer is no, right? So you keep the house for 5 years. You're making $15,000 a year for 5 years. That brings you to $75,000. And after 5 years, you're like, okay, I liked it, but I want to get a bigger house in my IRA, or I want to do something else with that money. So you decide to sell it. And during that 5 years, your property appreciated to $200,000. So $200,000 minus what you paid for the property at $150,000, you're making $50,000 return of investment there. But you also made $75,000 over the 5 years. So your total profits are $125,000 in 5 years. And how much do you have to pay in capital gains? Zero, right? So all that money, the rents, they were going back into your IRA. Now, when you sold the house, that was going back in your IRA. If you had any expenses, let's say you needed to paint the house, or maybe the AC broke, you needed to pay that, you would use the money in your IRA to pay those expenses. But this is the power and how you would build it. The other thing, multi-party real estate deals, right? Again, buying a property at $135,000, you rehab it using $50,000. The after repair value is between $210,000 and $220,000. Your monthly rents are at $2,000. How can you make this purchase, right? You can do it through multiple people, like I talked before, mix of IRA and individual money. So let's say that your friend, real estate investor A, decides that they want to partner with you. You would split all expenses and income. However, you set that up, whatever percentage of ownership, whether that's 50-50, 60-40, or you have 4 people in the deal at 25% each, you can do that. You can joint venture where party A buys the house, party B rehabs it. So we talked a little bit about that. And you split profits and you determine what that is ahead of time. You have a contract, so there's no going back and forth. And each party is allowed to have their specialty. And then you can also take a loan using your IRA. So let's say that you only had $100,000, but the house cost $200,000. You can actually take a loan. It's called a non-recourse loan using your IRA. And as I mentioned before, there is something called the unrelated debt finance income tax that you would pay. And that's only on the leverage portion of that, because your IRA, you have, the tax qualified money. And so you're not going to have to pay taxes on that for capital gains purposes and those kind of things. But if you do have leverage money, then you are subject to unrelated debt finance income tax. Oops, sorry. So let me ask you this. When you go downtown, anywhere, I saw somebody over here was from Ontario. I think somebody was in South Florida. Usually downtown, you see all these large buildings, right? And what do those large buildings have in common? Anybody want to answer? So the large buildings, they have their names on them. 90% of the time, they are banks, right? So there must be power in lending. If you see the skylines in downtown, you'll see that, right? So you can actually use your IRA to be the banker. You can lend your money, and these are the things that you would control, right? So you would control the loan amount. You would control the interest rate. You would control whether it's going to be secured or non-secured. You're gonna control the interest rates, the length of the term, whether it's paid monthly, quarterly, annually, if there's going to be origination points charged. And again, that security that I was telling you. And we have clients that do non-secured notes, and we have clients that do secured notes. Again, it's your risk tolerance and how comfortable you are with the due diligence that you do or that your attorney does for you, right? So, but again, another opportunity is doing that lending, because you can secure it with the collateral of the house. So if something were to happen and they default on the loan, then you could essentially take the house over, sell it, fix it, or however you want to do it. So just those are the different options that you can do there. And then I just want to point out how large the IRA market is. So there is almost $11 trillion in assets in the IRA market. And for many of you, maybe today was the first time that you heard about self-directed IRAs and that you could do real estate purchases and loans out of it. But for many of you, maybe you are aware of this and you just didn't think about it in the perspective of, let's say that you're a real estate investor and you have money that you want to use to invest in a property, but maybe you don't have enough. Well, hey, many people that have either old 401ks that are just sitting there. Maybe there's a couple of friends of yours that that just got laid off or what have you. They have that retirement money, and you could be essentially having more deals or doing more transactions as a real estate agent with IRA money. So it's very important that you know that this exists, that it's out there, that people can use their money. So people that have always said, "Oh, I'd love to get in real estate, but I just don't have money." Maybe they do, and they don't know that they have the money. So wanted to bring that to your attention. And the other thing is, what does it cost to wait and not self-direct, right? So basically it's paying retail price for your investment. So if you're buying stocks, bonds, mutual funds, yeah, the market goes up, the market goes down, and you think you're getting a discount because the market goes down, but everybody else is paying those same prices, right? In real estate, you may know of someone that, God forbid, their spouse just died, their spouse was the caretaker of the property, they're not interested in doing that, so they may give you their home at a discounted rate. Mike talked about it, maybe they're in, the jeopardy of foreclosure. So, there's a lot of things out there that you might be aware of that you would never know in the stock market, because everything is, public and you can see the volatility. So you can move quickly on lending or other opportunities when you're using your IRA. If you already have your IRA set up, it takes 2 to 3 business days to review an investment and fund it. So, again, it's very quick. And you're paying commissions and fees to advisors, where here the self-direction is you. You're doing the due diligence, you're seeking out the investment, and you're telling us to fund it. So those are kind of, what it costs to wait. And then for NuView, right? So what does it cost to open an account? It's a $50 application fee, which we're actually waiving for anybody that's watched the presentation today that's interested in moving forward, getting an account open. So there's a $50 account opening fee. And then there are 2 fee schedules. One is based on number of assets in your account, and the other one is based on the account value. So we let you choose that and what's more convenient for you. For those of you that are interested in learning more about self-directed IRAs, you can go ahead and text SDIRA with your first and last name to 484848. You'll receive our self-directed IRA e-guide for free, and you can contact me. Right there is my phone number, my direct line at the office, our website, my email address. What I'd like to just kind of finish the presentation with is I'd like to invite you all to our virtual real estate investors summit. That's going to be on March 16th and 17th. And so if you're interested in that, just shoot me an email and I'll get an invitation out to you. So any questions?
Great job, Lisa, for your presentation.
Thank you.
If you could put that information in the chat as well, just so everyone can see that in the chat, so they can reach out to get accounts set up with NuView, and also come out to a summit on March 16th and 17th too. So that's awesome. Does anyone have any questions? Let me check the chat just to see if you have any questions. I don't see any Q&A right now, but this is a chance to ask Lisa some questions while we have Lisa here. She gave some great information on how to use IRA and self-directed IRA to really increase your wealth with your real estate investing. And so you want to take advantage of this opportunity and stuff like that to actually say questions before we bring on our next speaker. And again, I just want to say great job, Lisa, with your presentation. Awesome job.
Simon, thank you. I appreciate it.
No worries. We appreciate having you on at the High Performance Session, and you sharing your wealth and knowledge when it comes to IRAs and how people can use IRAs to invest in real estate, and really leverage that, especially as a private money source where you're an investor. You're able to tap into other people's money and use IRAs to expand your business. It's just great because there's plenty of people out there that have accounts that just earning 1% or less in the bank, that if you can show them a better way that they can earn 10% or 8% secured by real estate or whatever percentage, is a lot better than letting it sit in a bank account where it's less than 1%.
Yeah, about a third of our clients invest in real estate. A third are note investors or, lending money. And then the other third are, investing in funds or crypto or precious metals and, those kind of things. So
there's a question actually, Lisa. Is there a difference between a QRP and a self-directed IRA?
Yes, the QRP is an actual plan, and that's that solo 401k plan. So you have to have self-employment income. With a traditional Roth IRA, you don't have to have self-employment income, and it's an actual account. So it's different. But feel free, we can have a chat offline with that. If you want to reach out to me, we can definitely discuss that in further detail.
No, that's fantastic. So yeah, that was a question from one of the members of the audience. So I just want to thank Lisa Rodriguez again for coming on a Sunday, sharing our knowledge in IRAs and self-directed IRAs and NuView. Thank you so much, Lisa.
Thank you.
Really appreciate that.
Have a wonderful day, everyone. Thank you.
Bye. Our next speaker is raising capital expert Brad Blazar. Brad has raised over $2 billion in capital, shared the stage with Kevin Harrington from Shark Tank. He has 3 best-selling books, Wings of an Eagle. He has a #2 rated podcast at Yahoo Finance. And he's going to talk about the secrets of how to raise private money from high net worth investors and how to create wealth through doing that so you can fund your real estate project, business, that special project. So we're so glad to have Brad Blazar on here. I want to welcome Brad on the High Performance Summit. How you doing, Brad?
Good. Hey, Jason, how are you today?
Great. So thank you so much for joining us. I'll let you take it away. We're going to be in for a great treat and talk about how to raise money from high net worth individuals. So take it away, Brad.
Great. Well, thank you so much for, Jason said, my primary skill is knowing how to raise money, and lots of it. And in real estate, as most of you know, if you're in it or you're finding out if you're trying to get in it, you need money to make money. And what I'd like all of you to do that are not yet real estate investors, that are just getting started, have a goal, have a dream of someday owning some property, is to just close your eyes for a minute. Just close your eyes and really just look at yourself introvertly and imagine what a perfect life would look like. a life of abundance, a life of wealth, a life of having multiple streams of income so that you weren't dependent on one primary source like a job. Maybe you've got a nice car in the driveway that you've always dreamt about, like a Bentley or a Jaguar or a sports car. You're living in a much nicer, bigger home. You're enjoying great vacations, staying at the Ritz-Carlton, or maybe enjoying them on private yachts. Let that sink in for a moment. Imagine what life could be. Now open your eyes. I want to ask you a question. You see, I believe a good coach will do three things for a person. Number one, they will motivate and inspire you. Number two, a good coach will get you to do things tomorrow that you're not capable of doing today. And the very last and the most important is a good coach or a good mentor will have those tough, difficult conversations with you, asking you perhaps questions that you don't want to answer or are comfortable answering, but that's where the big change and the transformation comes in. And the reason a lot of people, folks, are not where they would like to be is because they're stuck. They're not taking action. They're not moving forward because of a false belief, a limiting belief, a myth. And that myth is, I need money to invest in real estate and do it successfully. Part of that is true. Yes, you do need money. As an example, if you're going to go out and purchase a small rental property and go in and do some renovation and rehab, you're going to need money to do that. If you're going to invest in a multifamily property, go out and buy a 40 or 60 unit property, it's going to cost a lot of money. And then there's going to be, of course, the rehab or the renovation if you're getting into value add. Most people never even take the first step. And the reason they do not do that is because they don't have the money. And what I'm here to tell you today, folks, is all the money you need, all of it, is simply in the pocket of somebody else. And what you have to learn is a skill that can be taught by somebody that knows how to get money. And more importantly, a skill that you can learn, just like playing the piano, just like riding a bike. You see, once you understand how to get money, it's game over. Your life can change. You can start doing those big things. You can start accomplishing those big dreams. You can start investing in those properties by bringing in investment partners. And that's how I was able at the age of 23 to build an oil company, raising millions of dollars a month with drilling programs all around the country. That's how today I invest in multifamily. That's how today I teach other people all over the world how to do this, how to put together their collateral, their investor kit, their PowerPoint, their offering memorandum, things like that that you need in order to make a good perception, in order to move the conversation forward. Now, yesterday, I largely talked about something called the trust sequence, which were basically 6 steps that we go through in building trust, in building a relationship with a prospective investor. Because obviously nobody's going to invest with you or invest alongside you until there's trust and you've developed a relationship, right? Y'all with me there? Nobody's going to give you $50,000, $100,000 unless they trust you, unless they believe that you're going to be a good fiduciary, take care of their money, not going to invest it unwisely, going to do the things you said you were going to do. All of those things are very, very important. But what I want to talk about today is something that I refer to as the 4-step sales blueprint, and really unpack this and explain why this works. Because this is what I used, and this is what I've trained other people to use to literally raise tens of millions of dollars. You see, what Jason said earlier is I'm also known as the $2 billion guy, the individual that successfully has raised over $2 billion over the course of my career, primarily for real estate, for deals that I've been involved with, but also for other much larger sponsors, either as a co-GP or working alongside them, whether it's in multifamily or office or self-storage. And I've closed some big mega $1 million deals, 9 million, 11 million, 7.5 million. Now, I wasn't always known as the $2 billion guy. You see, there were periods in my life when, like many people, I was at a low, where I was unemployed, right? I was scrambling to pay rent. But I looked at myself one day and I said, what is my primary hard skill? What am I really, really good at? And what I came to realize is I was really good at raising money, because I had done it when I was in college working for 2 oil companies, getting on the phone, calling out to high net worth accredited investors, explaining who we were, what we did, and then obviously moving them to the point where they were writing a check or wiring proceeds or investing alongside us in our various projects. And today I have the pleasure of coaching and consulting people through Capital School, which is a program that we've put together to teach them how to attract investors, to teach them what they need in the way of an offering memorandum, collateral material to close investors, and then most importantly, how to use that money to invest in things that are going to create generational wealth, primarily real estate. Now, it all starts with a conversation. You can't get an investor without a conversation, right? And it doesn't really matter whether this investor is a cold call, where you're calling somebody off of a high net worth accredited investor list. It doesn't really matter whether you source this individual through your social media, your Facebook, your Instagram, your LinkedIn, which many people are doing today with some of the new rules and regulations like Reg A, or like a 506C offering, or a Reg CF through one of the crowdfunding platforms. There's a number of securities regulations that allow you to do these things. But again, you got to make sure you know what you're doing. But it all starts with that first conversation, that first call. And even if it's a warm relationship where somebody is referred to you by an existing investor, the best advice that I can give to you is slow it down. You see, I can't tell you how many dozens of people I've talked to over the last few years that have tried to raise money. They've hired people trying to raise money, and they have failed miserably. And one of the reasons that they have failed miserably is that they're trying to push the process too quickly. They're having conversations with that prospective investor too prematurely before there's ever trust, before there's ever a relationship even developed. And so what I'd like everybody to really think about is 4 steps. Okay, write it down, 4 steps. The first 2 steps, you're not selling. You're not having a conversation about the investment at all. The last 2 steps is where you present the opportunity and close, and hopefully bring a new partner and a new relationship into your organization. So on the 4-step sales blueprint, which all of you, of course, got a link to the other day, and I can share that again, it's to understand that on the first call or the first Zoom or the first meeting, you want to just disarm the person. You want to let them know that you're really here just to add value, to educate, to see if they have an interest in what it is you're doing, to tempt them, to pique their interest. Because ultimately, as an entrepreneur, as somebody doing real estate, you've got to uncover what that little piece of bait is that you've got to put on that hook to get that person to move forward and ultimately invest. Because as a real estate entrepreneur and as an investor, folks, I'm not fishing for bluegills. I'm looking for blue marlins. I'm looking for people that can write checks for $100,000, $200,000. And there's a big difference. It takes a lot of small investors investing $10,000, $25,000 to raise $2 million to buy a large multifamily property. But it doesn't take nearly as many when you're talking to blue marlins that are going to give you $100,000, $250,000. The way you start off the conversation is very, very important. But what you have to understand is human nature. You also have to understand psychology, because most of the time you're going to get a smokescreen. You're going to have somebody tell you, I'm not interested. And that's human nature. It's not that they are not interested. It's because they do not yet know you. There's no trust. There's no relationship. And so if you go into a conversation with somebody as a prospective investor, understanding this psychological element, you're then able to respond appropriately to move that process forward. As an example, let's say I had bought a high net worth accredited investor list, just a list of names, addresses, emails, telephone numbers of people that are supposed to be accredited. And I'm going down my list. And as an example, I was calling Richard today. Hey, Richard, Brad Blazar calling from 5 Star Capital. We're a private equity firm located in Houston, Texas. And I just wanted to call you today to see if you have an interest in alternative investments, and more importantly, investments that have substantial tax benefits. 9 out of 10 times, he's going to say, I'm not interested. And he's going to say that for the same reason that when I'm in a department store looking to buy a suit or a shirt or a tie, and the clerk comes up to me and he says, hi, how are you doing today? Can I be of service to you? I say, no, not right now, just looking. 9 out of 10 times, right? But eventually I go back to that clerk, or that clerk reapproaches me in a few minutes, and he's showing me around the store, and ultimately I walk out with what I'm looking for. But if you understand the psychology, when that person says, I'm not interested, you very quickly say, no, I understand, but before I let you go, let me just ask you a quick question. Are you not interested because perhaps you've invested in something like this in the past and it simply didn't work out the way you expected it to? You're going to get an answer, yes or no. And then you're going to come right back with another question. Well, let me ask you, have you invested in real estate before? Is this something that you're actively doing now? You're going to get another answer. And as long as you continue to ask questions, what you'll find is that in many cases, you'll be on the phone for 20 or 30 minutes. It's a beautiful thing. You're taking somebody from a not interested to now building trust and building a relationship. And all along, you're constantly disarming them, saying, you know, I just want to remind you again that I'm not calling today to sell you or offer anything. I just wanted to find out if this is something you have an interest in. And if it is, I'd like to just stay in touch and send you some information on our company, who we are, what we do. At the end of the call, you thank them for their time. And what I like to do is send out what I call a corporate piece. It's a teaser. It's usually a one-pager front and back, or it's a little what I call a coffee table brochure that has pictures of who we are, our team, properties, etc. Has content in there about the tax benefits of why it makes sense to invest in multifamily, etc., etc. And I make a little note in my CRM notes what we talked about, what he responded to, questions, answers, so that it refreshes my memory when I call him back in about another week or 2 weeks. Now, typically about 8 to 10 days later, I want to call this person back. And what I want to do on this second conversation, again, is disarm, build trust, build a relationship. So second call, hey, Richard, Brad Blazar calling from 5 Star Capital. How's the weather out there? Great. And I always like to spend about 3 to 5 minutes to re-engage, just to build that relationship. Ask them what they've been doing, how the family is, if they've had anything exciting happen. But I'm going to eventually transition back to the reason of the call. You know, I just wanted to check in with you and make sure that you received the information that I had sent. 9 out of times, they're going to say yes. But again, you have to understand human nature and psychology, because invariably in many cases, they're going to say yes, but I have not had a chance to look at it yet, right? Most salespeople at that point would say, great, let me give you a couple days and call you back later in the week. And you hang up the phone. The second you do that, their interest and the opportunity to bring them in as a partner has dropped considerably, right? Because now they kind of go into that, what I call that black hole, right? This prudent and the smart thing to do, and what I train my team to do, is say, you know, I certainly can understand we're both busy professionals. If you have it somewhere in your office or you can pull it up on your computer, there's a couple of real key things I'd like to bring to your attention today. That's the reason I called. I'll wait. And then you wait. They'll come back on the phone, or they'll come back on the Zoom in a minute or two. Great. And then what you do is you open up what you sent them in front of you. You open up, or ask them to open up what you sent them in front of them. Maybe it's on a computer. And all you want to do is just bring their attention to 2 or 3 things: the tax benefits, why multifamily, tell them a little bit about your company. Okay. Again, you're building trust, you're building a relationship. And at the end of the call, this is the most important part of this entire process. If you take nothing away today other than this one little secret, this entire training, this entire summit has been worth its weight in gold. What I always say at the end is, Richard, it's been great getting to know you over the last couple of calls, but I want to let you know that I may never have the opportunity to actually offer you an investment. And the reason is we like to give our existing investors the first right of refusal on most of our ensuing programs. And the majority of time they fill up very quickly because we're very good at doing what we do. But in the event I have an opening at some point in the future, do I have your permission to get back in touch? You see, when they say yes, they have opened the door to the opportunity now of investing with you. But the important part of that psychologically is what we call a takeaway sale. You see, most salespeople are trying to sell, right? They're trying to push product. They're trying to pitch. What you've just done is you've taken the opportunity off the table and given him the impression that he may not ever get the chance to invest with you. And it's psychologically proven that people desire what they perceive they cannot get. Okay? People perceive that people want what they perceive they cannot get. Well, if you're like building trust in a relationship, what I do after that second call is I send an email and I follow up by sending him now something of interest that is relevant to what we've been discussing. And this is what we call a non-linear touch. It's not a phone call. It's not a Zoom. It's not a meeting. It's just, hey, I thought this might be of interest to you, Richard. I saw this the other day in Barron's or the Wall Street Journal or somewhere. I thought that, you benefit from it. Now, 8 to 10 days later, I'm going to call him back because now I'd like to talk to him about the opportunity, the multifamily project or the deal I'm working on. So at this time, I call him back. Hey, Richard, Brad Blazar here again, 5-Star Capital. We spoke about a week and a half ago, and I told you I was going to add you to my list, which I did. It just so happens we've got a really great project we're working on down in Naples, Florida. It's a 142-unit property about 2 blocks from the beach. And what I'm doing today is I'm just going down my list, name by name. And so I came up to yours. And if you have a couple minutes, I'd love to tell you what we're doing. Do you have some time? Great. And then, folks, that's when you're going into the deal. See now, I didn't talk deal on the first call. I didn't talk deal on the second call. I got his permission. And now on the third conversation, 3 weeks later, after I've built trust and I've built a relationship, this person now trusts me. I'm now talking about the deal in Naples, Florida, going into all the specifics, where it is, why we like it, how we're going to add value, how much we're raising, the projected returns, the cash on cash, all of those things. I'm getting him excited. I'm getting him in his mind to see him owning a piece of this property. And at the end of that conversation, I'm going to just ask a simple question. Can I send you the investor package? If he says yes, I send him the package. Now, there's a lot of ways to do this. And I work with hundreds of real estate entrepreneurs and investors all across the country. Many of them are printing and sending a hard kit in a nice, beautiful folder. It's an investor kit that's got a beautiful PowerPoint and the offering memorandum and the subscription paperwork. And, it's a nice kit, makes a really beautiful presentation. Spend money on your materials because marketing and branding is so very important. You want that person to open up that envelope and go, wow, these people really know what they're doing. This is beautiful. Same thing with the website. Spend money there too. But when you send somebody information electronically, as many people are doing, invest a little bit of money to look at some of these platforms that allow you to do this in a data room, like Juniper Square, which is a great company, or Appfolio, or CrowdStreet. All of these are what I call platforms that allow you to create a virtual data room that somebody can enter and now look at your offering circular, look at your PowerPoint, maybe look at a video. And when they're at a point where they're ready to invest, many of these platforms allow them to move forward and invest electronically by completing the subscription paperwork using DocuSign. So you never have to be sending stuff back and forth in the mail. And it's a process where you can put basically steps along the way so that as they move through, there are different boxes to check to ensure that when you get a completed subscription document, they haven't forgotten to check a box where you have to go back to them or you have to call them on the phone or do something. That's what we use. Okay. We use Juniper Square. It's a great tool. So now you're on the third call, you send them the information. About 8 to 10 days later, you want to call them back. And this is where you're going to go through the material. You're going to answer questions. You're going to hopefully overcome any objections or any concerns. And this is at the end where you're just going to ask them, do you want to invest? Now, when you ask them, do you want to invest? I personally believe there's a right way and there's a wrong way, right? You never want to say, is this something you want to invest in? That's a yes or no question. You never want to say, how much of this do you want? Because they could say, I'm not interested. I want to think about it. What I learned to do a long time ago still works. Most deals that I've invested in or that we've put together have units or shares or a minimum investment, 50,000, 100,000, et cetera. And so when I've done a pretty good job of answering questions, I want to bring closure, okay, to that conversation. Closure is the process of bringing two things together. And you have to create what I call a little positive tension. I won't say it gets uncomfortable for either person, but the other person knows pretty soon you're going to ask them to get out the checkbook. And what I've done and what works really, really well, folks, is to use a little bit of psychology again. Okay. And here's what I mean by that. Give the person the opportunity to say no. And 9 out of 10 times they won't. Let me say that again. Very important. Just like what I said before, right? About the psychology of the takeaway and saying on the second call, Richard, I may never have the chance to offer you an opportunity to invest with us because we always give our existing investors the right of first refusal to invest on ensuing programs. This part on the fourth call, which is the close, is again, so very important. The way I ask people if they want to invest is I say, Richard, let me ask you a question. How much of this property would you like to invest in? Would you like 1 unit? Would you like 2 units? Would you like to take 3 units? Or do you prefer no units? And then I just bite my tongue. Now, it might seem like eternity, but the person's thinking. And usually what happens is they come back and they say, tell me again how much 2 units in your program cost. Or they'll come back and they'll say, tell me again how much a unit in your program cost. And at that point, you say, go get your checkbook. Let's fill out the paperwork. Richard, I'd like to welcome you aboard. Okay, that's how you close. And a lot of times you have to have closing techniques. You have to have one-liners. You have to have a little script of things to say if you're just getting started in this process as a newbie, learning how to raise capital. But I had a team of people when I had my oil company that were on the phone raising millions of dollars a month using this exact 4-step sales blueprint. I had an individual that came to work for me that I talked about yesterday, Jack, who was a train wreck that raised $25 million for my business in a year, made $250,000 in commission using this very framework, this 4-step sales blueprint. And the reason that this blueprint works is it follows the trust sequence that I talked about yesterday, right? Perception. Number 1, they're going to make a perception of you at that first meeting. Number 2, temptation. You got to find out what's going to tempt them, right? Number 3, confirmation, right? They're checking you out. Number 4, validation in their mind. They've checked out your LinkedIn. They've checked out your website. They validated that you're an honest, trustworthy person. That trust sequence ties up to the 4-step sales blueprint. And that's what makes this process work so very nicely. That's what allows you to raise money as an investor. Now, I want to dispel a couple of myths here today that I get very, very frequently from a lot of people. Number 1 myth is, Brad, I need prior performance. I need a track record. I need to have done this in order for me to go out and raise money. Nothing could be farther from the truth. Big time investors really don't care as much about your performance or your track record as they do about the deal. If it's a great deal and you've done your underwriting and the numbers make sense, you will attract capital because money always flows to great opportunities. And if you can show that investor that you've got a team around you of knowledgeable people, as an example, an attorney that you're working with, an accountant that you're working with, right? And you've got a little bit of depth in your organization, you're going to show them that, even though you haven't acquired a property before, you have a power team of people that are mentoring you and are going to help you be successful. 9 out of 10 times, you'll win them over. Now, once you obviously get some success, it becomes much, much easier. But don't let the fact that you haven't done this be a precursor, because, how could I, 23 years old, someone that dropped out of college, never drilled an oil well, go on to build a sizable oil company, raising millions of dollars a month, and convince those early stage investors to invest alongside me? The second thing that I will tell you is, do not go out and do these stupid, big, expensive dinners just because everybody else is. I can't tell you how many, literally hundreds of people I've consulted with that are spending thousands of dollars buying investor leads, sending them out, doing big steak dinners or big fancy dinners at nice restaurants, bringing a group of people in, doing a PowerPoint, trying to raise money. What you end up getting are plate lickers. You get a lot of people that show up that are there for the free dinner. Yes, you will raise some money, but you're not going to raise nearly as much as if you do something completely different. You see, the big investors, the people that have $3, $5, $10 million that you're hunting for, the blue marlins, very rarely do they go to those types of dinners. Very rarely do they go to those types of events. And there's a reason. They don't need the meal. They don't need the free wine like the plate lickers. But what they do get attracted to and what they will attend are what I call lifestyle events. And I've got a whole company. We've got a website, www.bbsignatures.com, that is a lifestyle event company where we invite high net worth accredited investors to get behind the wheel of supercars. Imagine inviting someone that's worth a couple million. Hey, we're putting a small group together. We're going to go drive Ferraris and Lamborghinis tomorrow. You want to join us? Who's going to say no to that? Or we're going to a polo tournament next weekend. We're going to go watch some polo. You want to come out and stomp some chuckers and have some champagne? Again, who's going to say no to that? We're putting together a golf outing. These are what I call lifestyle events. These are the things that big time successful people will come to. And at these events, you really don't want to sell. You want to network. You want to get to know everybody that's there, shake hands, make connections, introduce one person to another person. Hey, Richard, do you know Jason? Oh, Jason does this. Jason, I want to introduce you to Richard. This is what Richard does. And then after a few minutes, walk away. Let them talk. Go meet someone else. Towards the middle, you want to introduce yourself and give no more than a 10 to 15 minute quick presentation on who you are and why you brought the group together. And then off in the corner on a table, have your literature, have some booklets, have some materials, ask people to take that with them when they leave. But then the most important part is the follow-up that begins immediately after the event. You see, the problem most people have is they're good at getting in front of people, but they stink at the follow-up. Science has proven, folks, that it sometimes takes 7 to 15 touches to get somebody to say yes. The problem is most people give up after 3 or 4, right? You call someone, they say, hey, I haven't had a chance to take a look at it. You call them back a couple of days later, you miss them, you leave a voicemail, you don't hear from them, you send an email. You've made numerous attempts. And after the third or fourth, 85% of the people that try to raise money just give up. They just make the assumption the person's not interested. Sometimes it takes 7 to 15 touches to literally move a person through that process. And that's why it's so important to understand this cadence of linear and nonlinear touches along the way. You see? Now, I want to talk a little bit about what we're doing for those of you that are interested in learning how to raise money and really learning how to raise money in a big way. I started something that we call Capital School. And we started Capital School because in order to raise money, you need certain things. You just can't go out and start raising money without having an investor package. The problem is that for most people, going to an attorney and asking him to write you a full-blown offering memorandum, at a minimum, you're looking at 25, 30,000, all the way up to 50 to 75, depending on the quality of the firm, how much the attorney charges an hour, etc. Because they have to write your private placement memorandum, the offering circular that you're going to give to people if you're going to have a fund or you're going to raise money on a single asset. Most people don't have that kind of money. But here's what I'm going to tell you. That lawyer is not sitting down writing your offering memorandum like someone sits down and writes a book. It's a template. And all they're going to do is they're going to say, Maria, I need to have the address that we need to put in there for you. Do you have a logo? Can you create some content that we can plug in there for you that explains what you're going to do with the money when you get it? What is the sharing arrangement on the back end in terms of the split between you and the investors? And they're just plugging this in until they ultimately get a completed document and they send you a big fat bill. My thought is, if I gave you the same template that they use and told you and showed you and held your hand and showed you how to do this to create your own, and in that process save you tens of thousands of dollars, are you much better off? Of course you are. And what I will tell you is the template that we prepare and deliver to our students is done by one of the top securities law firms in the country, a firm that has multiple offices with hundreds of partners called Kaplan, Vogler, Cunningham. We work with a gentleman there by the name of Daryl Steinhaus. And so you can be rest assured that you're getting a very robust SEC vetted, approved offering circular with all the disclaimers, all of the things that need to be in there. The second thing is we teach you how to put together your PowerPoint, show you what needs to be in there. We even say, send it to us. We'll take a look at it. We'll give you some constructive feedback. Same thing with your investment teaser, your website. We're here to hold your hand each step of the way, from being a newbie or being somebody that's already raising money that wants to scale and go to the next level. Maybe you're raising money from high net worth individuals. You want to learn how to get into family offices. You teach that. Maybe you're raising money from investors and you want to get on some crowdfunding platforms, put your deals up on like Realty Mogul, some of these big crowdfunding platforms like Fundrise, teach you how to do that too. All of these things related to raising money are taught in Capital School. And throughout Capital School, we have weekly live training on Thursdays. I bring on guest speakers to introduce new and creative ways of raising capital. Last week, we had Matt Sullivan from Quantum talk about how you can pull the equity out of your house. It's not a loan. There's no debt. There are no interest payments. Okay? And by pulling that equity out of your home, you can now use it to invest in things like rental property or other types of investments to basically use that untapped equity. Imagine getting access to $100,000, $200,000 of money to invest where you never have to make a payment. Okay? It's not debt. And you can stay in the house 10 years, 20 years, 30 years. It's a fantastic tool that most people are not familiar with. These types of things are the secrets that we share because success does leave clues. The greatest, quickest way to become successful is to learn from other people that have done or are where you want to be. So if you're interested in Capital School, DM me, put a little note to me in the chat. We'll make sure you get the information. We'll get on a strategy call with you, find out if it makes sense for you to take a closer look. I'm only looking for some serious entrepreneurs that want to learn how to raise money, invest in real estate, and do it successfully. The second thing that I'd like to talk about, I'm going to make everybody a special offer today, is I believe that everybody has another gear. What I mean by that is as we go through life, we tend to plateau. We tend to reach a level and we stay there. And usually we stay there because we as people are programmed to default and retreat to a place of comfort because our brains are wired that way. Psychologists have studied this. It's called the primitive mind, the reptilian brain, which is designed basically to keep us out of harm's way. And what I've learned through my podcast, interviewing some of the most successful entrepreneurs that have created wonderful companies that are worth hundreds of millions of dollars, is that they were able to tap into themselves and flip a switch. And largely the flipping of that switch is activated either by an external force or by exposure to something or by being around successful people. There's a wonderful book. Many of you perhaps have actually read this book, Stephen Covey, The 7 Habits of Highly Successful People. And what Stephen Covey talks about is the whole person theory, which means that we as people are made up basically of 4 things. Okay. You've got a body, you've got a spirit, you've got a heart, and you've got a mind. And each of these 4 things represents something uniquely different. Your heart is what I call your prey drive. That's your beast mode, right? That's basically your passion to do something. That's what drives you. Okay. Your spirit basically, of course, is your faith. That's largely your confidence. It's where those things come from. Then, of course, you've got your body. That's your skill. Imagine a person like a Michael Jordan or a Tiger Woods, man, they're great. They're skilled. And then, of course, you have your mind. That's knowledge. The problem is you have to feed all of these things to be successful. Successful people understand this. But most people have not flipped the switch. Most people are not at a level that they potentially could be at because they have not yet surrounded themselves with successful people, worked with a mentor, hired a coach. And it's very sad to me when I see most people acquiesce and give up on life and settle where they are when they can go on to do much, much bigger, greater things. So I want to share my screen and talk about something that we are doing here in a couple of weeks called Capital Con, which is going to become the largest preeminent wealth building conference in the country, bringing together some of the biggest thought leaders in business and in financial literacy. Okay. Imagine being at an event and learning from Kevin Harrington, one of the sharks. Okay. Literally, he's going to be there. He's a speaker right there. You see his picture. Kevin Harrington, Shark Tank, inventor of the infomercial, one of our keynote speakers at Capital Con, April 16th and 17th. Sharon Lechter, the woman in the middle, the co-author of Rich Dad, Poor Dad that she co-wrote with Robert Kiyosaki. She personally has sold over 42 million books. She's the only woman on the entire planet that has ever received the highest award given out by Napoleon Hill's Foundation. And what she did is she worked with the Napoleon Hill Foundation to annotate a book that Napoleon Hill wrote that was never published called Outwitting the Devil. She's the person responsible for Outwitting the Devil. Great book. I highly recommend y'all read that. John Shin, who's a multimillionaire with WFG and the founder of Oxianta Financial, right there with Ed Milet, dude. A lot of people don't know John because he's not as flamboyant as Ed Milet, but he's a stud. Multi-million-dollar, multiple homes. He's going to be there. But what's key about John Shin is he approached Napoleon Hill's Foundation and he said, you know, Think and Grow Rich is such a wonderful, great book. Let's make it a movie. And so he is the executive producer, folks, of a movie called Think and Grow Rich, starring people like Barbara Corcoran, Grant Cardone, Tim Story, for those of you that know the World Shaker, who's the personal coach to 300 of the highest paid celebrities in Hollywood, Warren Moon, Joel Brown, Joe Stovall, etc. He's going to be there as the executive producer to have a special preview of Think and Grow Rich. Now, I want to offer this to anybody that's going to take action on this in the next 24 hours. This is a limited time opportunity to come to a live event. As you see down here, we have tickets, okay? You have basically 4 different levels of tickets. VIP gets you in the door. Premier gets you in the door, gives you some networking, gives you some lunch with the speakers, all the way up to Platinum, which is the red carpet. If you want to surround yourself with big-time thought leaders and learn from the best, what I will do is upgrade you to the next level. What I mean by that is if you sign up today or in the next 24 hours and buy a VIP seat at Capital Con, you'll come in as a premier. Okay, I'll give you $200. We're going to bump you right up to the next highest ticket. If you buy a premier at $497, you're going to come in through the door as a diamond. You see how this works? And if you want to invest a little bit more money and spend $800 to buy the diamond, you're going to get a $4,500 package where you're personally now sitting down in a mastermind with all of these people in the same room. Okay, you're going to have a special platinum lunch, special party where you're physically getting to sit down and interact one-on-one with some of these great thought leaders. Take advantage of that, folks, because success does leave clues. And I brought together literally some of the best people in financial literacy, in investing in real estate, in raising money from other people. Okay, for example, Robert Martinez owns Rockstar Capital here in Houston, Texas. He's got 4,400 units in multifamily and a portfolio close to $500 million, all raised through investor capital. He's going to be there. Dave Seymour, some of you that are on the East Coast, like Jason in Boston, might know Dave. He was the host and the star of the reality A&E TV show Flipping Boston, buying houses, rehabbing them, selling them for profit. Dave Seymour in the house. So take me up on this offer, folks. Like I said, it's good for the next 24 hours because you're here at the High Performance Success Summit. Get in the room, learn, get the knowledge, flip the switch, and then go back home and implement the strategy and the plan with the tools that you will be taught. With that, I'll end and open it up, Jason, for any questions that anybody has in Q&A about raising money, about capital school, or about, more importantly, how you can learn how to use OPM to basically take your real estate business and really take it to the next level.
Do you have any questions for Brad right now? Capital Con is going to be a great event. Capital School is great. I've coached with Brad, and Brad's already made a difference in my business, and he's worked with me as well. So I think personally say Brad is awesome. You definitely take advantage of that. Let's see if anyone has anything in.
I'm going to go ahead and put the link for Capital Con in the chat so that anybody that does have an interest that would like to click on that, learn about Capital Con, look at the website that we've created for it, and perhaps make a decision, can actually take this link and actually go there. This is the link. If you click on it right there in chat, it'll take you right to the Capital Con website. And like I said, folks, there is magic in attending a live event. It's number one, the energy. It's the inspiration. It's also the connections that you're going to make while you're there through networking. You know, we're talking to companies like NuView that are custodians to have a table and be there as a sponsor in the room, because we're going to be bringing investors into this that are looking for ways to create horizontal streams of income, looking to make connections, looking to do big time things. By being in an environment like this, it's not just the people on stage. It might be the person sitting right next to you or the person that's sitting in front of you, because during the breaks, you connect with people and you find a support team that are going to then help you take your business, take whatever it is you're doing to the next level. I always explain to people that are looking at an opportunity like Capital Con, yeah, it costs a little bit of money, right? You got to pay for the ticket, you got to drive, or you got to fly to get there, maybe spend a night in a hotel. But what's the cost of not attending? Could cost you millions of dollars by not being there. Could literally cost you hundreds of thousands, millions of dollars by not being in that room. Because one idea, one thing that you pick up on, whether it's from Kevin Harrington or from Sharon Lechter, who co-wrote Rich Dad, Poor Dad, probably one of the most famous books on creating wealth, or learning from someone like Sergio Bruna, right, who is the global ambassador for General Motors, has done over 600 commercials, interviewed by Larry King. One idea backed with some action can make you a huge success. Think about that. You go home with one idea that someone gave you. You put some effort and action, that becomes a business, and that business grows, and you become wealthy and create generational wealth. So like I'm saying, folks, the decision is yours. This is a limited time offer to get in the room and learn and be around big time real estate people, big time capital people, people that are worth literally hundreds of millions of dollars that are there to teach you what it is they've done. That's what they're there for, to teach you how I did this. This is what I do today. This is how I'm building my business. This is how I'm scaling. This is how I'm taking things to the next level. Because again, success does leave clues. People that are at that level aren't there because $297 is going to make a change in their lives. They're there because what they enjoy doing is making other people successful and seeing the transformation that takes place as other people implement things they've learned and then take their lives to the next level. So get in the room. And again, if you have any questions, please reach out to me. My personal email, if you want to send an email to me, is info @bradblazar.com. I'm putting it here basically in the chat. That's our email address, info@bradblazar.com. If you're interested in any of our other coaching services on Build a Beast, creating the right mindset, activating what I call prey drive so that you start operating at a higher gear. Typically, most people that are enrolled in our program see a 35 to a 60% lift in their sales, revenues, and profits over a 6 to 9 month cycle just by working with us, because we're able to activate and unlock this thing within them where they start working with more intensity. They start living life on the offense with a plan rather than living life defensively, just showing up every day. If those types of things resonate with you and you want to see greater success, just send an email to us and we'll get on a quick one-on-one strategy call. And Steve will definitely reach out to you as it relates to Capital School to make sure that you get the information that you need as well. With that, I'm going to wrap up. If we have a few more minutes, Jason, do you have any questions or anything, because you and I have worked together, that you would like to touch upon as well?
No, I mean, with experience working with you, Brad, has been great. I mean, it's helped us with not only the summits, but working on coming out of my own coaching program, and I'll be releasing my ebook, How to Become a Big Star in Event Planning, which will be released shortly. And so it's been a great experience as well, working with you, Brad. So
great. Well, everybody take care, be well, be safe. And just remember that if you're not where you are in life today, you don't have to stay where you are. You see, life basically is all about the decisions we make. It's about our habits. It's about our beliefs, because our beliefs define our reality. And beliefs are reinforced by our habits. If you instill new habits into your daily routine, there's only one thing that can happen. You will become more successful. You will start seeing success, but you have to continue with that habit routinely. It's like putting one step in front of the other, right? It's like running a marathon. Small things compounded over time will ultimately allow you to attain the goal and reach the level of success that you're wanting to get to. There was is that a question? I thought there was maybe a chat.
No, that was a question for our last speaker that she answered.
Gotcha.
So no, there's no new questions in the chat or on the Q&A. So again, I just want to thank Brad Blazar for coming on and sharing some great wisdom on how to connect with high net worth individuals. You want to reach out to Brad for Capital School or Build a Beast, or his upcoming conference, Capital Con, taking place April 16th to 17th. So you want to reach out to Brad for that. Thank you again, Brad, so much.
Thank you so much again, Jason. It's great to be here today.
All right. Well, thank you again. Yep. And Drew said, thanks, Brad. So our last speaker today is going to be me, Jason Burke. And I'm going to be talking about how to become a big star in event planning. And just a little background about me, I've done over 200 live and virtual events, worked with some of the top people in the personal development space, including Powerteam and Ashley Bill Walsh, Brad Blazar, as you just heard speak, Millionaire, Finck, Dave Lindell from Maverick Mentor, David T. Fagan, the former CEO, Guerrilla Marketing, just to name a few. What I'm going to go really into today is how to create your live events. Now, when you're doing a live event, the first thing you want to think about is what is the theme and what is the audience you have and what type of event you want to put on. So once you identify the audience, and there's a couple of different ways, you want to know what's your product, what's your service, and who is your ideal customer to get in front of, and what experience you're going to create with them. So you want to look at some of your competitors and what you're doing, especially when you're starting out, what they're doing well, what they're not doing well. You may take some surveys and figure out what they're doing well or not. And so what value you can offer. So what value your event can offer. Can you fill a need, whether it be nationally, locally, how you can do that. And you want to fill that need. and you want to be able to fill that need. Because once you understand what the experience you're going to create, the next thing is going to be very important is picking a date. You want to pick the date and book the venue. Because I've seen so many people that have had great live events that want to do them, by running into them 2 or 3 years later, and they're still talking about doing an event that they never picked a date and just went for it. Remember, it's a process. You're going to learn along the process of how to be more successful. You're going to learn how to do your events, what worked, what didn't work, how you can get better. You talk to your sponsors, you talk to your speakers, you talk to your audience. So as you're building your event, your live event, you get better and better. Now, at the beginning, the events are fairly small. Look for companies that have meeting spaces. I did this in Vegas many a times for our real estate meetups, where I make buy and trade deals with companies. They can speak a few minutes about their product and service. In exchange, I get a free room or a discounted rate on the meeting space they had. This will save you hundreds of thousands of dollars at the beginning, especially when you're first starting out. And then as you build your audience and you build that audience, then you can go into a hotel meeting space. Now, when you go with a hotel meeting space, you got to know, you want to know how many people you have. You want to know what type of setup you're going to do. Are you going to do classroom style? Are you going to do theater style? Are you going to do what type of style room? How many sales tables you need in the back? How many registration tables you need? How many vendors you're going to have? Are you going to have food and beverage? If you have food and beverage, you got to have a food and beverage minimum, because a lot of hotels will have a food and beverage minimum, where if you meet that minimum, they'll give you the meeting space for free. You also want to know about AV. Typically, AV and electronics, especially where you're booking, because some hotels will charge you for the AV, which they will, and it'll be inexpensive to bring your own AV instead of paying them, because you have to know if some shops are union shops or they're not. And the union shops, you got to know that, because you might have to pay the hotel person, if you bring your own AV, to sit there and watch, which can be a real pain. So you got to know the difference between union and non-union shops. And sometimes it's just better to hire your own outside AV prior, because you'll save money on that. And then sometimes it's better to go with the hotel. It just depends on the price breakdown on that. So once you book your venue, you know what you're going to have, you know how many people. The next thing you got to do is figure out how you're going to market it. There's a couple of different ways to market your events. I mean, you go social media, look at Facebook groups, Facebook posts, doing some Facebook ads, LinkedIn ads, LinkedIn events. You can do LinkedIn events, invite people in your LinkedIn connections as well. So you can do that as well. You have Eventbrite. It's a great way to post your events. You can put great photos and videos of your events and things like that. So when you create the description, where you'll get a short end of the description, you'll have at the front. Then you'll have the main description. It allows you to add videos or photos. You want to make sure the videos are clear. You want to make sure the photos are clear. You want to make sure, thank you, Linda. And you want to make sure that's tight. And then you also have your Eventbrite, you'll have what you call order form section. When you click on that section, you're going to click on advanced settings, and you're going to click on buyers only. You're going to click on buyers only because that'll allow you to capture people's cell phones and email addresses. It's very important you get the cell phone number, because you want to be able to text and call people to confirm. Where if you just go on each attendee, it'll be the default setting, which is name and email. The problem with that is some people answer the emails and some don't. So typically you want to make calls, you want to make emails out to people. You want to have a way of reaching people, reminding people, because you're building a database. You're building your list, your tribe. So as you're producing more great content and more events, people can do that. And that's really important. So you build that social media, you can use Eventbrite. Also, you have Meetup. Meetup is a great way to build a community. You can build a Meetup community, tell the group why you started the community, how you connect in people, how you can advertise your event. You can put a good photo, put a description. Meetup has a feature where you can do Zoom links or webinar links, because a lot with COVID, it's been a lot online. Then you have a way to take payments. A lot of that will go through WePay and Meetup, which then you'll have connect your bank account so the money will transfer, but it takes usually 2 to 5 days to do that. So Meetup is another way to do that. Instagram is another way too, but that's all. Your photos got to be clear and your videos got to be good. because Instagram, it's all about photos and videos. So you want to have nice images that crisp, good. You don't want to have fuzzy images. You don't want to have fuzzy videos. And then once you get to 10,000 followers, you'll be able to use the swipe up feature on Instagram. And that will give you the ability to put your website and everything on that. So once you get to the 10,000 follower mark and beyond that, or 10,000 people, that you'll be able to do that. But you got some really good ways to promote events. And another thing is affiliate marketing and joint venture partnerships. People that have other databases that you can either joint venture, you can trade speaking spots, you can pay them to advertise in their list. We've done this with Realty 401. We've done this with other people on our events ourselves, where we'll advertise and they'll advertise on our list and we'll advertise on their list, creating a joint venture so you can leverage other people's network. Especially if you're a speaker, you want to leverage on other people's stages and how to do that. So that's very important as well. How to leverage on other people's stages, speaking and getting those databases so you can keep growing your database, because your database is your gold mine. Once you keep building that list and building that list, you get a bigger and bigger audience. It's a lot easier to borrow someone else's audience if you have to pay to be on that stage, because it's well worth it. I mean, and that is one of the things you want to do. Now, one of the things you want to also consider is your speaker selection. Again, this depends on the type of event you have. Like the summit here, this is a multi-speaker event. So we have different speakers speaking on centric real estate investment topics, also speaking on business topics and everything like that. But you might have a workshop, so you may just be you or one or two other speakers. You have to decide what works best for you and selecting your speakers. Also, once you get a little experience and everything, you can do speaker sponsorships. Speakers paying you to be on your platform. So you can include like how much time they have. Do they get the registration database? Do they get the recordings of the event? Do they get to share a stage with a celebrity expert? Like for us, it's Brad Blazar, one of our top celebrity experts. Or Kevin Harrington, say one who speaks on his platform gets to share a stage and say use that in their marketing, that they share the stage with Brad Blazar. So these are some of the things that you can put together in your packages and sponsorship packages and everything like that. So whether you have a company that wants to sponsor, whether it be NuView, whether you have a company that wants to speak and sponsor, there's always people looking for stages out there and connections. So which is really great. And you want to think about that. How many speakers do you really need? Maybe if you're doing a small workshop, you only need you and one other person. If you're doing a big event, maybe you want to have like 8 to 10 speakers and they have it a couple of days. So you're dividing the speakers and the networking time, because you want to create interaction as well. You want people to network, they got to visit their vendor booths. You want to make sure. And that is also important. So you want to create that experience where they're getting great content, you're giving them breaks, you're giving them networking them information. All that is very important in what you want to do as well. And then you want to say the execution of the event. Now, this is important because live events are a little bit different than a virtual event. A live event, you got to be at the venue either the night before or an hour and a half, 2 hours prior. You got to get into that room prior to the event. You got to make sure that the registration tables are where they want. You got to make sure the sales tables are where they want. You got to make sure the room is set up the right way, because you can't assume the hotel's going to do that. And I've run into plenty of events when that's not the case. And then you and your team have to reset the room the way you want, because they didn't set up the way you want it. You have to make sure the AV equipment works. So I get into the room the night before to test out the AV, or first thing in the morning to make sure your AV equipment works, whether it's from the hotel or you brought it in yourself. If you're bringing your own equipment, you should test it the night before, like early in the week, to make sure everything runs right. If you're using a hotel's equipment, you should test it. Get there the night before or the very morning of and test it to make sure there's no issues, because there is. You got to give yourself enough time to counteract those challenges, which, okay, you want to make sure you have the registration badges. You want to make sure you have the sign-in sheets. You want to make sure as people are coming through the event that they're getting that. And you're getting them in the door. You just get them assigned seats. So if you have certain levels, like VIP, Platinum, you got to make sure the seating is according to those levels. You got to have a team. A good way to do is volunteers. People, you volunteer, you give them free lunch, you give them maybe a gift bag for giving their time, and they can help you with your event, because they'll get to come in for free. They'll get to work the event for a certain time, and then they'll get to make some really great connections. So you want to, on the day of, you want to really be executing. You want to make sure the AV works. You want to make sure the room works the way you want. You want to make sure your speakers are on time. You got to tell your speakers what time they can get in from vendor setup. You want to have vendors set up a couple hours at minimum before the event. So if your event starts at 10, you want vendor setup to be started about 7:30, 8 o'clock at the latest. You know, if you can get them in the night before, that's even better, depending on how many speakers and vendors you have. If you have a lot, you probably want to get them in the night before so they can set up the room. But otherwise, if you have a few, you can do it the morning of. And I think that's so important because you want to set that. You want to make sure that they have it set up. And then another thing too is you got to keep your speakers on time. I've had this plenty of times. I know Linda's on this call. She can tell you this too. You got to make sure they're on time. So you want to give them like the 30 minute, 15 minute, 10 minute, or 5 minute and wrap it up sign. Because some speakers will like to go long. And if they go long, they put you behind schedule. That is, it can become, depends on how many speakers. You may or may not be able to make up the difference. So if you have a lot of speakers and someone cuts into that other speaker's time in 10, 15 minutes, knocking you behind schedule and you're playing catch up. And that's no fun. So this is where you got to know how many speakers can you realistically accommodate for the event. You got to give some buffers. So if you tell them the hotel, the event's got to go 9 to 5, you need to have the room till at least 7 o'clock at night and get in the room at 7 at least, or 7:30 in the morning. You know you're going to go to 10 and you start at, say, 9, you want to be in there at 7. You want to give yourselves a couple extra hours on each end because that makes all the difference in the world. You get in the room early, your team get in the room early, you're making sure you do what you need to do. Because that in your live events, that's everything, the execution, making sure the event runs smoothly, making sure the vendor providers are taken care of, making sure your speakers have everything they need in the AVs and everything and stuff like that. Because some speakers are going to be pretty simple. Some speakers have certain videos you have to know. You have to play the intros. You have to make sure the equipment works so they can play the intros. Some people have people introducing them a certain way. You got to know this bios. So if you're the host or you have another person that's a host, you got to have them read the bios and make sure they have it down so they introduce it in the way the speakers want to be introduced. And then you got to make sure you have plenty of time for your audience to network and get great contacts as well. So you really got to take notes of those things and really be prepared, especially in a live event situation, because things are going to happen in a live event. People are going to show up late. You may have a speaker going on and all of a sudden now you're playing catch up. You might have a situation where maybe the room's not open as soon as you want. You got to get in there. The AV doesn't work. You have to figure a situation out. You got to be prepared for these things because these things are going to happen in your live event situation. And you want to be prepared to how to handle that. Because not what the challenges come up, it's how you handle those challenges so you can keep moving forward and keep winning at a high level. And that's what you want to do. So as you build your live events, like I said, when you're first starting out, if you're doing a small workshop, look to do it in a company that matches your ideal audience. You can save hundreds and thousands of dollars and not a hotel at the beginning. And then eventually go to the hotel as you build up your audience. And there's plenty of local hotels that will give you really good deals, especially if you know the days that they're not busy and you bring in business during those days. You'll get a better rate on the meeting space or the food or the AV because they know that day is slow for them. And that will be a great day for you to book your event. So these are some of the things